Hello guys, this is CA Vishal, Jain, faculty for CA CFA and SBR paper. Guys, in financial reporting paper, interpretation has been an area where you guys struggle a lot. And it has been an area which is tested in the exam for in every single attempt for a bare minimum of 20 marks section C. So I understand it is a real pain area. So I thought to help my students in this chapter of interpretation of financial statement. So what I am doing is I am coming up with an with this video wherein I will be discussing 5 questions of each and every single type. There are 5 types of questions that can come up in interpretation. For each and every type, I will be discussing one question. Okay, and I will be guiding you how exactly to frame your answer in that. But before that I will be discussing few important mistakes which you need to avoid in the answers of interpretation, and towards the end of the video I will be giving you few assignment questions, and I can give you a guarantee, if a student watch this video till the very end, the entire video, it is gonna be a long video, but if a student watches the entire video, follows every single piece of advice which I am giving in this video, I can give you a written guarantee that he or she will score 15 plus out of 20 in the chapter of interpretation. Okay, so are you guys ready? Come on guys, tell me, are you guys ready? Everyone tell me guys, please. Come on. So first of all, let us discuss the mistakes which you need to avoid. Then we will practice the questions and then I will give you assignment. Okay, chalo, the advice. Now, I believe you know in the questions of interpretation of 20 marks, it is divided into 2 parts, right? Part 1 is the computation of ratios. Part 2 is the commentary, right? Part 1 ratios comes for generally in the range of 7 to 8 marks. Commentary comes from 11 to 14 marks range. Now, in the ratios, examiner report is clearly saying, do we need to write the formulas? No. Writing formulas are not required. But giving the workings for your calculations, the workings are very much required. The workings are very much required. So you have to give the workings. Let's suppose you are computing operating profit margin, right? So you have to write what is the operating profit, what is the revenue, operating profit by revenue is coming the operating profit margin. Just writing the formula and the ratio directly. Okay, if it is correct, you will get marks. But if you have made any mistake, you will not get the marks under own figure rule. But if you give the workings and you made a mistake, okay, so whatever part is correct, you will get the marks for that. That is, step marking will be done if you give the workings. So giving the workings is mandatory. Giving the workings is mandatory. There are times that even if your answer is correct, but if you have not given the workings, you can see a deduction in the marks for that. Okay, so giving the workings is something very mandatory for the computation of ratios. Okay, now coming to the commentary part. Now in the commentary part, there are few important comments which I would like to highlight here. Point number 1. Generally what happens, we guys try to, we as students try to, when we see, okay, gross profit margin increased, gross profit margin decreased, operating profit margin increased, operating profit margin decreased, okay, we write, okay, gross profit margin is increased. Reasons, we don't write the reasons. So we have to write the reasons for the increase or decrease. We have to write the reasons for increase or decrease. Now there are students, they write the reasons, but they write rote learned knowledge. Okay, whatever is given in their Kaplan textbooks or BPP textbook, they write the same reasons here. No guys, writing the rote learned reasons will not fetch you marks. Okay, you have to give the reasons by linking to the scenario. Okay, let me give an example of this. What happens? Let's suppose a question movere. Now in the question movere, let's suppose operating profit margin has decreased. So now the student will say operating profit margin has decreased. Why? Because revenue has fallen down. That's why operating profit margin has decreased. No, it is not a correct way of writing as answer. So why operating profit margin has decreased? You have to link to the scenario. When you read the scenario, you will find okay, it is into the airline business, aviation business. Now the cost of operating the flight is same. Okay, now please understand. In the previous year, the flights took off 100 times. In the current year, also the flights took off 100 times. So the number of flights that took off in the previous year, in the current year, both are same. So the cost of operating the flight is same. But the number of footfalls, the number of passengers has decreased as compared to the previous year. So cost remaining the same, but revenue falling, thereby decreasing the operating profit margin. So this is how you have to write your answers. Okay, so you have to narrate a story. You have to become a storyteller. Okay, rather than just writing the rote learned knowledge from the textbooks. No, it is not going to work. You have to think like a businessman. You have to think like the owner of the company. You have to think like the CEO of the company, right? And then write the reasons for the increase or decrease of the ratios. Okay. Second thing. Second thing. Okay. Now, link to scenario. Second is the link to scenario. Point number third is think about the future. Think about future. Now, when I say think about future means what? There might be some items, one-off items which are present in the current year but which will not be present in the future years. So eliminate them and then recompute the ratios and then compare. Or, for example, revaluation. Okay, revaluation might be, let's suppose we compare two companies A and B, right? A is doing revaluation, B is not doing revaluation, right? So revaluation is something one off. So eliminate revaluation reserve, and then recompute the ratios, recompute capital employed, recompute ratios, and then compare. So you have to do what if analysis. What if this one of items didn't exist? So think about future means what if analysis. So doing this what if analysis is a must for all the one-off items or the items when you compare. Let's suppose you are comparing two companies. The companies might have different accounting policies, right? And if the data is available, so make the accounting policies comparable and then recompute ratios, and then you compare it. Again, it's a what if analysis, right? If there are one-off items which will not be present in the future, right? Like for example, restructuring. The company is undergoing restructuring in the current year. The restructuring cost will not exist in the future years. So eliminate this restructuring and then recompute the ratios. Okay, you are comparing two companies. One company is following revaluation model, another company is not following revaluation model, right? So eliminate the effects of revaluation and then recompute the ratios. This is what if analysis. So all those things you have to do. And the last point, the last mistake is comments, conclusion. Students generally do not conclude properly. So please understand, to give conclusion, you have to keep two things in mind. When you started reading the question, in the very first line, there will be a problem statement given. Read the problem statement. Your conclusion should be answering to that problem statement. And the conclusion should also be revolving around the type of questions. Let's suppose you are comparing two companies. Okay, so your answers, your conclusion should be concluding which company is a better acquisition target. You are comparing this company with the sector, so you have to conclude whether this company outperformed the sector or underperformed the sector. Okay, now let's suppose you have acquired a subsidiary during the year. So you have to conclude whether this acquisition was a good decision or a bad decision. You have disposed of a subsidiary during the year. So you have to conclude whether the disposal was a good decision or a bad decision. Okay, so you have to give your conclusions properly. Just don't summarize whatever you have written. No, you have to give your conclusion. Conclusion is something where you are giving your own opinion. Okay, now So now that we have discussed the mistakes that you need to avoid in the exam, so what we'll do is we'll now practice these 5 questions. Please understand, guys, in interpretation, there are 5 types of question that can be asked in the exam. One is the comparison of one entity over 2 years, current year versus previous year comparison. One company, but 2 years, 2025, 2026 comparison. Two companies of the same period. Okay, company X, company Y comparison with the industry or sector averages. Okay, comparison of Infosys with the entire IT industry. You have acquired a subsidiary during the year, you have disposed of a subsidiary during the year. Okay, so I have identified one question from each type and discussed in this video going which you will see now. Okay, now I request all of you to watch the video till the very end. Okay, let us start the discussion now. Okay, as you are aware, this question is of year on year comparison. A company is Ray company. The performance is given for the previous year. The performance is given for the current year. Okay, 2 year performance is given, and we have to evaluate the company whether the performance is improved or declined. What is the scenario which we have to comment here in this question? Tell me, will you be able to solve this question? Shall we start it? Shall we start solving? Chalo guys. Ray company is a services company offering support and training to several large entities. Basically, it's a services company. Okay, please understand. It is a services company. We need to know about the products offered. Extracts from the Ray's financial statements of the previous year and of the current year are as shown below. Profit and loss is given, revenue, cost of sales. Now, just if you spend 2 minutes time with this P&L, guys, revenue has decreased. Revenue has decreased, but profitability has increased. Huh? How can this be the case? How can revenue decrease and profitability increase? Quite weird. But still, we are here to analyze. Extracts from the statement of financial position is given, current assets are given, ordinary share capital, share premium, retained earnings is given, loan notes are given, deferred income is given from government grant, trade payables, deferred income, and tax payable is also given. Okay, now we have to read the other information, but before that I will read the requirement and then come to the other information. Okay, but before reading the requirement, I will first of all have some water. Chalo, using the information in note 6 here, calculate the basic earning per share for Ray company for the year ended 31st December 2009 and restated earnings for 2008. Oh, independent question of earning per share. ठीक है. Requirement number B is calculate the ratios for both the years. So 4 plus 5, 9 marks. Done. 11 marks is for analysis. Now for the students who says that, sir, my interpretation is not that strong. So my dear friend, my dear cute friends, out of 20, this 4 plus 5, 9 marks is easy peasy. Right? Now out of 11, I believe you will be able to score at least 5, 6. 4 plus 5, 9, 9 plus 6, 15. You are able to score 15 out of 20. What else do you need? For a question where you are not having that strength? Even if you are scoring 15 out of 20, what is wrong in that? I believe you can definitely do that. Okay, chalo. So shall we start with the first question, that is the earning per share? Chalo, let us start with it. Requirement number A, earning per share. For that, we need to read this point number 6 first of all. The earnings per share was correctly calculated to be 12.5 cents for the year ended 31st December 2008. Means for the previous year, earning per share is given. Now, during the current year, on 1st March 2009, Ray Company issued 10 million shares. So, Ray Company issued 10 million shares at market value, and cash was raised to purchase new property. On 1st September 2009, there was a 1-for-3 issue of bonus shares. Profit for the year ending 31st December 2009 was 5.6 million. So, first of all, we have to compute what? First of all, we have to compute what? We have to compute what? Tell me. Weighted average number of outstanding shares. So, date, issue, adjustments, close. Chalo. On 1st January 20x9, opening balance. Then after that, how many shares opening balance? How many shares opening balance? Is it given in the question? Yes. Opening balance was 20,000. 20,000. Then on 1st March X9 20x9 fresh issue of 10,000 shares. So after issue it became how much? 30,000 shares. After issue it became how much? 30,000 shares. Okay. Then on 1st September 20x9 bonus issue of how much? 1 for every 3. 1 for every 3. So how many shares you ideally have? 30,000. So how many shares in bonus issue? 10,000. So 30,000 plus 10,000 is how much? 30,000 plus 10,000 is how much? 40,000. Now, what is the bonus factor? What is the bonus factor? 1 plus 1 by 3 is 4 by 3. 4 by 3 multiplied by 4 by 3. Okay, done. Now, let us adjust with the timing. 1st January, Jan, Feb, 2 months to 2 by 12. Then March, April, May, June, July, August, 6 months. Then September, October, November, December, 4 months, 4 by 12. Done. Can you please compute the value? Tell me guys. 20,000 into 4 by 3 into 2 by 12 is 4444. 4,444. Then 30,000 into 4 by 3 into 6 by 12. 20,000. Then 40,000 into 4 by 12 is 13,333. So what is the amount? 4444 plus 333 is 37777. 37,777. This is the weighted average number of participants, right? So what is the earning per share for 31st December 20x9? It is the profit is 5,600 divided by 37,777 is equals to how much? 14 14.8 cents. What is the restated earning per share for 31 December 20x8 for the previous year? So what is the earning per share? 12.5 cents multiplied by 1 by bonus ratio. What is bonus ratio? 4 by 3. So multiplied by 3 by 4 is how much? 12.5 into 3 by 4 is 12.5 into 3 by 4 is 9.38 or 9.4 because you can write 9.4 cents. Palas is asking why 4 by 3. You see the bonus factor which has to be multiplied for all existing shares existing on the date of bonus issue. All the shares existing on the date of bonus issue has to be multiplied with the bonus factor. Okay, chalo, deal done. Now close. This part is closed. So first requirement is over. Coming to the second requirement. Requirement number B is ratios. Requirement number B is ratios. So now for ratios also what we'll do is we'll insert table. It will be easy for both of us since we have to prepare for 2 years. So I'll take 5 columns. Okay, so let's write here for workings, or I'll write here 3 columns. I'll take up 3 columns. Okay, ठीक है. 5 columns. Workings, then 20x9, again workings, 20x8, ratios. Chalo, which ratios we have to compute? Gross profit, operating profit, ROCE, GP margin, operating profit margin, return on capital employed, current ratio, trade receivables collection period. Current ratio, receivables collection period. Chalo. Now please keep in mind the ratios which you have to compute. We have to compute excluding deferred income because it is given in the question. The requirement is given in the question. Okay. Now, so let us compute the ratios now. Gross profit margin. First we'll do entirely for 20x9, then we'll do entirely for 20x8. 20x9. Gross profit margin is 41050 divided by 58,200. Then 9450 divided by 58,200. ROCE is again 9450 divided by capital employed is long-term equity plus non-current liabilities. Equity is 58,500 plus 8,000. 58,500 plus 8,000. Current ratio is current assets by current liability, that is 24,600 divided by current liabilities is 9650 minus 5,000. Receivables collection period is trade receivables 6,500 divided by sales, assuming it to be credit sales 58,200 multiplied by 365 days. Okay, done. Can you please tell me the final ratios? Guys? 70.5%. Since it is in the service industry, the margin will be higher. Operating profit margin is 16.2%. ROCE is 14.2%. Current ratio is 5.3 times or 5.3:1. Receivables collection period is 41 days. Okay, now similarly for the previous year, what is the amount? Ratios. Gross profit margin will be 38750 divided by 63,400. Then operating profit margin is 3350 divided by 63,400. Then ROCE, return on capital employed. Return on capital employed is how much? It will be 3350 divided by Sir, for interpretation, we don't need to read all notes. Just start from the table given. That's a you can say a misinformation that you have. Okay? No. Since we are calculating the ratios, we don't need this one. For ratios, unless question specifically says that adjust the financial statements, then yes, we will need to read the information to adjust. Otherwise for the ratios, we have to use the information given and calculate the ratios. Okay, but for writing the reasons, we definitely need to read the this information. Otherwise, if we are writing the reasons without reading these, we will fetch a big zero. See, this much big zero. ROCE divided by capital employed for the previous year. Capital employed is 41,200 plus 8,000. Current ratio is 7,200 divided by 3050. Receivables collection period is trade receivables of 6,100 divided by sales of 63,400 into 365 days. Chalo, let us find the ratios. 61.1%, 5.3%, 6.8%, 2.4:1, and here it is 35 days. Everything is done. So now, before we start to read the additional information, just have a look at it. Gross profit margin has went up. Operating profit margin has went up. ROCE has went up. Means the entire profitability has went up. The entire profitability has went up. Current ratio has also went up. Okay, current ratio has also went up. Okay, but I don't know why current ratio has went up. Oh, see, current ratio has went up due to why? Tell me. Cash, sufficient cash, so much of cash. Okay, now receivables collection period has also increased. Might be we have given extended credit. Chalo, let us write the information. Analysis. Now, what was the third requirement? Comment on the performance and position for both the years. Chalo. Requirement number C. Comment. So we have to write for financial performance. We have to write for financial position. And then we have to write conclusion. Okay. Chalo. Now, how will things work here? Total marks is 11, right? So please understand, conclusion will have around 1 to 2 marks. depending on how much you can write, but roughly a bare minimum of 1 mark. Then total marks allocated for requirement C is 11 marks, right? So then I can say here 5 to 6 points, 5 points here, roughly 5 marks here, or I can say 7 here, 3 here, 7 marks here, 3 marks here, depending upon how much we have. Total financial performance plus position should be of 10 points. Okay. Conclusion 1 mark for sure. Conclusion 1 mark, a bare minimum. These plus this accumulated 10 marks. Okay. Chalo. Now this allocation between financial performance and financial position, I believe we can do on a case to case scenario basis. Okay. Now, chalo, how to do it? But before I start to do the analysis, we will have to read the information. One of the Ray company's directors left at the beginning of the year, 1st January 2009, to set up Kylo company, a business in direct competition with Ray company. Okay, basically it says one of the directors of the company, of this Ray company, left the company and started its own company by the name Kylo company at the beginning of the year. Okay, now to meet its sales level, Ray company reduced its prices by 5% and extended the payment terms. So I can write first of all here, I can write few points. Receivables collection period has increased. Receivables collection period has increased from 35 days to 41 days due to extended credit period offered by Ray company to maintain its sales level. Is that clear, everyone? Fairly possible to write? Tell me yes or no. I believe it is fairly possible to write these points. Nothing difficult in my opinion. Nothing difficult in my opinion. Come on, guys, tell me please. Is it clear, everyone? This point? Yes. Now, please understand. Please understand. The company has reduced the sales price by 5%. The company has reduced the sales price. Now, if you see, as I was telling you, revenue has decreased in current year. Revenue has decreased in current year. It might be the case that customers would have shifted to Kylo company. Tell me yes or no. Revenue has decreased. The customer would have shifted to Kylo company, right? Or it can also decrease. Due to additional, due to decrease in selling prices. Due to decrease in selling prices. 1 point done. Now, since the selling price has decreased, but the cost would have remained the same. So then we'll write, since selling prices has decreased, this will reduce gross profit margin. Okay, now, but we see that the gross profit margin is increasing. However, gross profit margin is increasing. Now, why it is increasing? Let's read the information further. Kylo company ran some advertisements publicly criticizing the work of Ray. Okay, the competitor is criticizing the work. Okay, now Ray company began legal action against Kylo company and received $4 million compensation. This is recognized in operating expenses. Okay, now please understand, we have received 4 million compensation, which would have reduced my operating costs, thereby increasing my operating profit margin, Now, Ray company received government grant of 20 million on 1st January 2009 for Ray company to maintain employment in the local area. Okay, Ray company has recognized $5 million of grant income against cost of sales. So now you understood, this 5 million of grant income is reduced from cost of sales, means cost of sales reduced, profit margin increase, gross profit margin increase. Okay, now understand, this increase of gross profit margin is mainly attributable to grant income of $5 million. Now if you see here, if you come here guys, come on, if you come here, gross profit is 41050. Let us remove this 5,000. What is the profit then? 36050. See, the profitability reduced. It is 38750. If we remove 5,000 from this one, it will become 36050. Means the gross profit margin reduces. Okay, so this increase of gross profit margin is mainly attributable to the grant income. It is because of grant income. I believe you are able to understand my point. Then coming to operating profit margin. Operating profit margin is also increasing. Now we know the reason for that also. Further, operating profit margin is also increasing. One of the reason for increase is the carry forward impact of increasing gross profit margin. Also, since the company has received a settlement amount of $4 million, which is reduced from operating costs, thereby increasing operating profit margin. Very easy. Tell me, so far I have written 5 points. Tell me, in these 5 points, do you think any points are like, you can't write it? Very simple, right? Revenue decreased, selling prices decreased, increase of gross profit margin, operating profit margin, settlement amount, right? Very apparent. These are very apparent points, right? Now let us do some what if analysis, because see, understand, since settlement amount of $4 million and grant income of $5 million are one-off transactions. Hence, if we remove, what if analysis, if we remove these, operating profit is how much? Operating profit is equals to how much? Tell me. 9450, right? 9450 minus 4000 minus 5000. It is equals to 450. Okay, and margin is is how much? 450 divided by 450 divided by 58200 into 100. 450 divided by 58,200 into 100. 0.773%, which is significantly lower than last previous year. Right? Tell me yes or no. Come on, guys, tell me yes or no. Right? What else can we write? We have written about gross profit, we have written about operating profit margin. Now we can write about ROCE. ROCE, return on capital employed, has increased in the current year. Has increased in current year, and this is majorly attributable to increase of operating profit margin. Clear, everyone? Okay. Now, so we have how many points? 1, 2, 3, 4, 5, 6, 7 points in financial performance. Okay. Now we can write around 3 points in financial position, of which we have already written 1 point. Now we have to write 2 more points. 2 more points you have to write, and then conclude, and then done. Okay. Now, chalo. What are the other points? First is current ratio. Current ratio is significantly higher. Current ratio increases significantly in the current year as compared to previous year. And why? This is mainly due to, now let us read the reasons. First is cash. I know cash. This is mainly due to higher levels of cash. Now, from where the cash came up? Comes a question, from where this cash came up? So let's read. Grant done. Okay, this point is done already. Now, Ray company reduced its staff in 2009, but the finance director believes the government grant will not be repaid. Okay, a government inspector is due to revisit Ray company within a few months. Okay, loan notes are due for repayment in 5 years, but the bank negotiated the interest rate following the concerns it had over Ray company's cash flow. Okay, now share capital, issue of shares, issue of 10 million shares. Okay, is mainly due to higher cash. Okay, cash inflows are coming from issue of equity shares and grant proceeds. Okay, now you can write further also, though it is 3 points done, but still you can write further also. Why was equity shares issued? You can write why was equity issued. You can write what is the risk, what if grant is to be repaid. See, you have many points to write. We are not writing only those many points, okay, because we have to write 10 points, and 10 points we have written. So why will we write further? Okay, but see, what I'm trying to say is, even if you miss out on 1 or 2 points here, you will have to write again here. Okay, you have a buffer of 2-3 points. Always in the exam you have buffer of 2-3 points. Okay, so you can definitely write those many points. Okay, now this is done. Now then you have to give the conclusion, then you have to come to the conclusion. Okay, now conclusion. Okay, profitability. Okay, the company's performance has improved in current year, but most of them are one-off events, further further okay, there is a risk of repayment of government grant which has to be evaluated. Simple, deal done, close. Tell me, is that clear, everyone? Is that clear, everyone? Okay, now I believe we have written fair, good reasons. Okay, now we can write further also. Loan repayment. About loan repayment also we can write, right? What if grant is to be repaid? Lot many points. We are not required to write only those many points. 10 marks, 10 points, simple, done, cool, done. Okay, now one point which students were asking me, ideally I believe you guys know this, but still since you are asking me, I am telling it to you. Okay, how to identify the additional part of analysis except financial performance, financial position and conclusion, if any. The question will specify, Batman. Question will specify that. Okay, now understand. Students are asking me, while calculating the restated earning per share of previous year, why did I multiplied with 3 by 4? Tell me, how to, what is the formula for ratio? Profit divided by weighted average, right? Now, so tell me, if I have to multiply bonus factor, I will multiply bonus factor here. Okay, now for the previous year, this amount is given as 12.5 cents and asking me to compute restated. So I will say 12.5 divided by whatever is the weighted average number of shares, because this is this one, right? So I can say 12.5 multiplied by 1 by 4 by 3. So this becomes 12.5 multiplied by 3 by 4. 9.4 cents. I thought, guys, you guys already know these basic things, but still, okay, if you don't know, I am here to explain. A very good evening to all of you. Can you please confirm if the audio and video is clear to all of you? Come on, guys, in the chat box, please. Come on, everyone. Everyone in the chat box, please. Come on, guys. Is the audio and video clear to all of you? Let me just check things if it is okay or not. Yeah, wonderful. Okay. So let us start the past paper practice series. So basically it will be a series of 5 sessions wherein we will be practicing the past papers, section C. Now, as you know, the past papers available in the ACCA practice platform. The past papers available in the ACCA practice platform has only section C, and we will be practicing section C here in these live sessions. Okay, now the modus of this session will be, first of all, I'll be helping you understand the question. I will be helping you understand how to draft the answers, how to do the calculations, how to understand the requirement, okay, what exactly has to be written, okay. Sometimes I will be drafting the answers myself, sometimes I will be helping you on how to present the answers. It will be a mix and match of each and everything, okay. Now, further, we'll also be referring to the comments from the examiner reports. Okay, so what I'll do, I'll show it to you. Just give me a minute. So what I have done is, see, I have got myself examiner report. Okay, so let's suppose today we are discussing September December 2025 paper. Okay, now in this September December 2025 paper, whatever are the relevant comments given by the examining team, we will be discussing it off. So I'll show it to you. So what I have done is, I have already highlighted the comments which I have to discuss with you. I have done my homework. I have already done my homework. Okay, I have already done my homework. Whatever comments I need to discuss with you, I have already highlighted, so that we'll discuss it and we will be done with the same. Come on guys, tell me, are you super excited for the same? Are you super excited for this 5 days FR past paper practice series? Come on guys, please do let me know in the comment box, all of you. Everyone, come on guys. Okay, now coming to the point, guys, first of all, if you're watching this session, and not liking it, it's not justified. Come on, I request all of you, please do hit the like button and subscribe button. Okay, and maintain a high interactive in the class. Be as much as possible. Okay, be interactive in the class. Discuss with me. Okay, now I'll try to take up all the queries that comes to me in the chat box. Okay, chalo guys, let us start the session now. Okay, chalo. So today we are going to discuss September December 2025 paper, and September December 2025 paper has 2 section C questions. It has only 2 section C questions, right? Okay, now before I start, I just want to highlight something, guys. I know some of you might be knowing this fact, but most of you don't know this part. So I want to highlight something. Please understand, in FR exams, section C, which is of 40 marks, and I believe you know that it has 2 questions, question number 31 and question number 32. Please understand, guys, please make this very clear, okay, that one of these questions will definitely be from interpretation of financial statements. One of these questions will be from interpretation of financial statements. Okay, now, and another question, question number 32, will be from the preparation of financial statements. Now it can be single entity financial statements, or it can be group financial statements. It can be a mix and match of anything. Now please understand one more thing. As per my understanding, as per my analysis, okay, I think I have evaluated more than past 15 exam question papers, okay, and as per my understanding, okay, now the interpretation of financial statements question that comes up in the exam are of 5 types generally. Type 1 will be comparison on year, same company, current year, previous year, what is the comparison, or comparison of 2 companies, or comparison with sector averages, with sector or industry averages, or acquisition of subsidiary, or disposal of subsidiary. So these are the only 5 types of question that has been asked in the chapter of interpretation of financial statements. These are the only 5 types of question that has been asked in the interpretation of financial statements. Okay, now Okay, now in question number 32, it can be either a preparation of single entity financial statements or a group financial statements. Now, what can happen in the exam? If you are giving your exam, okay, what will happen is option number 1, you will get interpretation of financial statements plus preparation of single entity financial statements, or it can be the case you will get interpretation of financial statements plus group financial statements. Now it will never be the case that you will get single entity financial statements plus group financial statements and no interpretation. No, that will never be the case. So is interpretation important? It is very, very, very important from an exam point of view. Is that clear, everyone? Come on guys, please tell me. Is that clear, everyone? Come on guys, please tell me. Okay, so now today we are discussing September December 2025 exam paper. Okay, now next day, that is tomorrow, this is day 1 of 5. Day 2 of 5 will be discussing March June 2025 paper. Day 3 of 5, okay, we will be discussing September December 2024. Day 4 of 5 we will be discussing March June 2024, and day 5 of 5 will be discussing September December 2023 paper. These are the 5 papers which we have to discuss. Is that clear to all of you? Come on guys, tell me the dates if you want. Okay, I've already shared the schedule in the Telegram group and the WhatsApp group also. So these are the 5 papers which we have to discuss. Now coming to our paper, if you see here, can you see the ACCA practice platform? First point is, you see the exam paper September December 2025, point number 1. Now first question, if you see, it is from the interpretation of financial statements. Okay, and this is type 2, comparison of 2 companies. Here you will have to compare 2 companies, Coral Company and Reef Company. Okay, now I told no, you will get either of one type, right? Either interpretation of financial statements and single entity, or interpretation of financial statements and single entity financial statements, right? So now if you see here, this question is of interpretation of financial statements. The next question is from the group financial statements. Okay, is from the group financial statements. Now we are going to discuss both the questions in the today's class. Let us discuss one by one each of these questions. Okay, and yes guys, if you are watching these sessions, I request you, all of you please hit the like button. Okay, hit the like button. Chalo, let us discuss these questions now. Shall I start reading the questions, guys? Come on, tell me, shall I start reading the questions? Chalo. First question is from the interpretation of financial statements. Okay, chalo. It says Aqua Company is a listed company looking to grow through acquisition. It has currently $5.1 million of excess cash available. We will need this information. This company has excess of $5.1 million cash available, which the company wants to invest. Okay, we don't need this information right now, but we will need this information going forward. Now, Aqua Company intends to take an active role in managing its investment. So basically, what is happening in this question, Aqua Company has $5.1 million surplus cash. Now tell me, whenever we have surplus cash, what do we think? Let us invest it somewhere. Let us invest this cash somewhere. Okay, same thing Aqua Company is also thinking of. I have surplus this much cash. I want to invest in a company. Now, Aqua Company has identified 2 potential companies, Coral Company and Reef Company. So now what does the Aqua Company expect from us? So the management of Aqua company expects from us that we should evaluate both Coral company and Reef company and suggest to the management of Aqua which among these two companies are a better investment target. Okay, so we have to identify Aqua company should invest 5.1 million in which company, Coral company or Reef company. So basically we have to compare these two companies. We have to compare Coral company versus Reef company. I believe you have got the background of this question. Okay, now chalo further. Both Coral and Reef operate in the same industry sector and the extracts of the financial statements are given as follows. Okay, so revenue is given, gross profit is given, operating expense is given, operating profit is given, interest expense is given, SOFP extracts are given, equity share capital, retained earnings, loan notes, loan payable, it is given. Okay, now there are some additional information given. Let us read the additional information first of all. On 1st December 2005, Coral company, Coral company purchased an item of plant and equipment from an overseas supplier. Guys, whenever you read a question, I request all of you, first of all, always see what is the reporting date. Whether you are an FR student, FM student, SBR student, any paper, any skill level, P level, but whichever paper you are giving, okay, if the question has reporting date, always highlight the reporting date. Okay, identify that reporting date. Now, come on, guys. So it says on 1st December 2005, Coral company purchased an item of plant and equipment from an overseas supplier which cost 6 million dinar. Now tell me, so basically the purchase has been in foreign currency because our functional currency is dollar. The functional currency is dollar. Purchase has been made in dinars. Right? So it's a foreign currency transaction application of IAS 21. Coral company paid the invoice in full on 30th April 2006. The foreign exchange has not yet been calculated or recorded. Oh, they have not yet calculated the foreign exchange gain or loss. So can you please tell me, the exchange rate is given. Can you please tell me, guys, what is the foreign exchange gain or loss? Can you please tell me? So let us compute it. Let us compute the amount of foreign exchange gain or loss. Now, see here. So we purchased on what date? On 1st December 2005 we purchased. At what price? 6 million dinar. Okay. Now, what is the exchange rate on 1st December 2005? 2. Guys, please understand. Let us understand how to read this part. It says for every $1 we need 2 dinar. For every $1 we need 2 dinar. Tell me, which currency is stronger, dollar or dinar? Which currency is stronger, dollar or dinar? Definitely dollar. So we have to convert from dinar to dollars. Right? So we have to divide 6 million by 2. Okay, we have to divide because we have to come from a weaker currency. To a stronger currency. The amount should reduce. Okay, that's why we have to divide. So 6 by 2 is $3 million. Now, when are we going to pay? We are paying on 30th April. 20x6. Okay, how much we will pay? We have to pay 6 million dinar. Okay, now, what is the exchange rate on the date of payment? 3. Okay, so what is the value here? What is the amount that we have to pay? $2 million. Oh, we got an exchange gain. We got an exchange gain. We got an exchange gain. Exchange gain of $1 million. We got an exchange gain of $1 million. Is that clear, everyone? Is this exchange gain of $1 million clear to all of you? Clear? Okay, chalo, let us read further. It says Coral Company's 8% loan notes was issued several years ago. Okay, and these are redeemable in cash on 31st August 20x8. 20x8 means after 2 years. After 2 years, the company has to repay, the Coral Company has to repay the loan notes. Okay, so we need to know whether the company will have sufficient cash for the repayment or not. We will need to know whether the company will have whether the Coral Company will have the sufficient cash for the repayment or not. If the Coral Company has sufficient cash for repayment, well and good. If Coral Company does not have sufficient cash for repayment and this Aqua Company acquires Coral Company, think of it. If Coral Company has sufficient cash for repayment, good, very good. But if Coral Company does not have sufficient cash for repayment, then what will happen? Aqua Company will have to do the refinancing. Aqua Company will have to do the refinancing. Aqua Company will have to support its subsidiary. Aqua Company will have to support Coral Company. If Aqua Company acquires Coral, if Aqua acquires Coral and Coral is unable to repay the amount, then Aqua will have to support Coral. Aqua will have to support Coral. Okay, how support? Support might be in the terms of refinancing or might be giving guarantees to the bank. Chalo, let's read the question further. Reef Company negotiated a $2 million 10-year bank loan in August 20x4 to fund the purchase of new equipment. The principal is repayable in full at the redemption date. Now, on what date? We have taken, the Reef Company took a loan on August 20x4 and it will be payable after 10 years, means August 20y4. Okay, now we are in 20x6, means this loan will be repayable after 8 years. Repayable after 8 years. Okay, now the potential prices of the company are given as follows. This is the market price of the company. Now, neither Coral Company nor Reef Company has issued any equity shares or raised any additional long-term borrowings in the current year. Okay, neither any equity shares have been issued by both these companies. They have neither issued any equity shares nor they have taken any new loan in the current year. Okay, so this is the situation, additional information given in the question. So now what we have to do? Guys, please understand what I have seen. Ideally, students struggle in solving a question of interpretation. And why do they struggle? Sir, what if the analysis which I write in the exam doesn't hold good, or I am not able to write the analysis? Then what will happen? Sir, I am bad at doing analysis. Will I be able to score good marks in the exam? Buddy, please see. This question is of 20 marks. Out of 20 marks, 4 marks is for calculation of ratios. 3 marks is for calculation of ratios. 4 plus 3, 7 marks is for calculation of ratios. Now in the analysis also, these two will have roughly around 4 marks. So 4 plus 3, 7, 7 plus 4, 11 marks is solely calculation based. Out of 20 marks, 11 marks is solely calculation based. I'll show it to you. Just give me a minute. Why I am saying 11 marks is calculation based? Let me show it to you. Where is marking scheme? Okay, I have not got the marking scheme. Kya? ठीक है. No issues. I have not got the marking scheme with me here. Okay, but still, please understand. This 4 marks is calculation. This 3 mark is calculation. Out of this 13 marks, This is for this conclusion is for 1 mark, and explanation of control is for 3 marks. So 3 plus 1, 4 marks. So this 4 marks is also mostly calculation based. So 4 plus 3, 7, 7 plus 4, 11 marks is solely calculation based. You are just required to write analysis for 9 marks, 9 points. You have to write just 9 points. Chalo, in the exam, out of 9, even if you score 5, tell me how much are you scoring? 4 plus 3, 7, 7 plus 4, 11, 11 plus 5, 16. 16 out of 20 you are scoring in this question. Is that bad? No, I don't think so. No, I don't think so. Yes, if your target is to score 100 out of 100, then definitely it is not good. But if you are targeting 100 out of 100, definitely I expect that you are doing practice of lot of questions. Okay, chalo. Guys, chalo. Now we have to solve the questions. The best part is they have already drawn the format. Now, one comment from the examining team. One comment here from the examining team before I move further. The examining team says, students, while calculating ratios, they write formulas. And examining team is saying, we don't need formulas. We need working. So if you are writing gross profit margin, what is the formula for gross profit margin? Gross profit by revenue, right? So right here, what is gross profit? What is revenue? Write that. Okay. If a student writes here, gross profit margin is gross profit divided by revenue, 0 marks, a big zero for that. No marks for that. Why to spend time in that? No formulas required to be written in the exam. Okay. Now, so what you have to do here? See, first of all, you have to calculate the ratios, ignoring the foreign exchange difference. Ignore it. Okay. Now, let us ignore. For coral and for reef, both we need. Chalo. Gross profit of coral company, it will be gross profit is 4650 divided by 14995. Operating profit margin is 1050 divided by revenue of 14995. Then return on capital employed is operating profit by capital employed. What is operating profit? Tell me what is operating profit. Operating profit is again 1050 divided by what is capital employed. Capital employed will be equity plus non-current liabilities. What is equity? 4000 plus what is non-current liabilities? 5000. Students have generally what they do in the exam is while computing capital employed, they don't take non-current liabilities. Okay, they take only equity. Guys, capital employed means the funds invested in the business. Capital employed means the funds invested in the business, whether through equity or through loan, doesn't matter. Okay, whether through loan or equity doesn't matter. What is the amount of funds that is invested in the business? Okay, now students are asking whether we will get this type of pro forma prepared in the exam for interpretation questions. Yes, ideally it is prepared. For the questions on interpretation, ideally I have, in my experience, what I have seen is they prepare it off and give it. Okay, not for other questions. Now, gearing is debt by equity. Guys, understand. For gearing, if they clearly write debt by equity, you are not required to use any other formula of debt by debt plus equity. No, don't use that formula. Students have done that mistake. And all these I am talking from where I am coming from for these points. See, these are the comments not designed by me. These are the comments given by the ACCA examining team. See here. Students, must show their workings in full. You have to show the workings. You have to show the workings. You are not required to show the formulas. Again, capital employed, students have taken either only debt or only equity. No, capital employed is debt plus equity, both. Then, while calculating debt equity ratio, students have used debt by debt plus equity. You can't use this formula. When the formula is actually given in the question, you can't use any other formula. Okay, when the correct formula was stated in the requirement. Okay, and then you will say, sir, I solved it correctly only in the exam. My concepts are clear only. I don't know how I failed in the exam. Okay, so you have to take care of these small petty issues. Now, debt by equity. What is debt? Tell me, for Coral Company. 5,000 divided by equity is how much? Tell me, come on guys. How much is equity? 4,000. So now, can you please tell me the ratios? I will not be computing the ratios. You have to tell me the ratios. Quickly, tell me please. Quickly tell me please the ratios. So this one will be 31%. This one will be 7%. This one will be 11.7%. And this one gearing will be 125%. Okay, now chalo, let us compute the same for the reef company. For reef company, gross profit is 4505 divided by 15015. Operating profit is 1800 divided by 15015. Return on capital employed is 1800 divided by capital employed is debt plus equity is 6,000 plus 2,000, 6,000 plus 2,000, and debt by equity is 2,000 divided by 6,000. So tell me, what is the ratios? What are the ratios? So it will be 30%. It will be how much? Tell me. 12%. Very good. Now return on capital employed will be 22.5%. Very good. Gearing ratio will be 33.3%. This is the gearing ratio. Now, if you have solved this much, very well. Congratulations, guys. You have scored 4 out of 4. You have scored 4 out of 4. Now, please understand. Here, so 4 out of 4 means what? If this entire thing, 4 ratios and 4 ratios, 8 ratios, you are getting 4 marks, means half a mark for each ratio. So even if one ratio is wrong, no need to panic. You will get only the deduction only for the area or the ratio where you have made a mistake. Okay, guys, am I going fast? Can you please tell me, am I going fast? Am I going fast, guys? Is the speed fine? I think I'm not fast. Okay, chalo. Foreign exchange difference. So foreign exchange difference, how to compute the foreign exchange difference? Speed at the point. Very good, Sneha. 6 by 2 minus 6 by 3 is yes, is equals to exchange gain of $1 million. Exchange gain of $1 million. Now, can you please tell me, though you are not required to write the treatment, but can you tell me what will be the treatment of this foreign exchange gain? What will be the treatment of this foreign exchange gain? Can you tell me, guys? it will be a part of the operating profit. It will be a part of the operating profit. Okay, chalo. It will be part of the operating profit because it is arising in the business, right? It is a part of operating profit. Now, so we will add it to the operating profit. So we have to find for the Coral company what is the ratios including the foreign exchange difference. Right? And yes, very good point by Parul. We have to add it to the retained earnings. Why? Because operating profit will increase, then the ultimate profit will increase, and the profit is added to the retained earnings. Hence, the retained earnings will also increase. Very good, very good. I am very happy with this understanding discussion. Okay, and guys, those who have not liked this session, tell me, shall I say something? Those who have not liked this session, please like it, yaar. Come on, guys. Everyone, please like it. Please hit the like button. And also the subscribe button. Chalo. Now, the ratios. Of Coral company. Operating profit is 1050 plus 1000 divided by revenue is 14995. Now return on capital employed is 1050 plus 1000 divided by what is the return on capital employed. So it is 5000 plus 9000 but plus 1000. Okay, now debt by equity. So it will be, debt is how much? 5000, no change in that. 5000 divided by equity is how much? 5000. How come 5000? 4000 plus 1000 is 5000, right? So what is the ratio? What are the ratios? It is 13.7%. Return on capital employed is 20.5%, if I'm not wrong. 2050 divided by 10,000 is 20.5. Yes, and here it is 100%. Tell me, is it clear? Is it clear? So with this, you have scored as good as 7 marks. Tell me, guys, what, don't you think it was quite very simple and easy? Don't you think it's quite very simple and easy, right? Okay, chalo. Now, we have to write our analysis. How to write the analysis? Before writing the analysis, always read if they have given any specific instruction. Analyze the performance and the position of the potential acquisition targets. Okay, so how you have to do the analysis? So first of all, we will analyze financial performance. Then we will analyze financial position. Okay, then we have to comment on which company the control can be exercised. Aqua would exert control on its investment. Okay, and then we have to evaluate the conclusion. Please understand, the conclusion you will fetch 1 mark. For this analysis, you will fetch 3 marks. Right now, the remaining is for the financial performance and financial position. How many marks? 20 minus 7, 13 13 minus 4, 9 marks. So for financial performance and financial position, cumulatively you have 9 marks. Okay, cumulatively you have 9 marks. Chalo, let us comment on the financial performance. How? Please see. The gross profit ratio of Coral is higher. The gross profit ratio of Coral is higher. Okay, and what about after exchange difference? Oh, there is no impact of exchange difference on the operating profit margin. So let's write here. Let's write that. Let's write that here. Gross profit margin of Coral is higher. Now, can you tell me the reason why? Gross profit of Coral is higher. Can you tell me the reason why? Why? Because it might be due to a higher selling price or lower cost. Now, sir, you only said that for writing the reasons we have to link it to the scenario. You have to link it to the scenario. But tell me, in the scenario, in the additional information, is there any information given for gross profit? No. So how can we write that? So here we are left with no other alternative other than writing the, you can say, rote learned knowledge. Okay, now Kusal is saying, sir, introduction is necessary. No introduction is necessary. Directly jump to the financial performance, financial position, your point, and conclude. Close answer. Closed answer. Be specific to the point. Now, students ask me, sir, can we write this analysis in the form of points? Yes, you can do that. Yes, you can do that. No issues at all. Okay, now, so gross profit done. 1 mark, close, done. What else? What else? Operating profit margin. See here, the operating profit margin of Reef is 12. Coral is 7, means the operating profit margin of Coral is low. But if we compare this with after adjusting the foreign exchange difference, it becomes 13.7, means it increases. So what I'll write for operating profit margin? Operating, I'll write here, operating profit margin of Coral is lower as compared to that of Reef. As compared to that of Reef. Now you have to write the potential reason for the same. Again, the reason is not given. The reason is not given. So again, we will write rote learnt knowledge. So this could probably be due to better control over costs of Reef. Basically, Reef has a better control over the costs. Reef has a better control over the operating cost, you can say, over the operating costs. Okay. Now, again you write, further, we see that the operating profit margin of Coral increases. See here, the operating profit margin of Coral was ideally 7%, but if we adjust the exchange difference, it becomes 13.7%. Increases to 13.7% after adjustment of foreign exchange difference. Okay, which is higher than Reef, So now you will say the operating profit margin of Coral is better than Reef. But now again I will counter here. Will this exchange difference come every year? Tell me, will this exchange difference come every year? No, it is only specific to this year. Okay. However, foreign exchange gain is an one-off event. Is a one-off event. Is one-off event. Right? Is that clear, everyone? Okay, chalo. So operating profit also we have committed. Now coming to return on capital employed. ROCE. Now, if you are writing ROCE in short form, make sure you are writing it here. You are defining ROCE somewhere. So what I will do is, what I will recommend you is ROCE. You write it off here like this. You write it off ROCE like this here. Okay, so that when you write the answer in the exam, you are not required to write the full RO's, return on capital employed, in the exam. Okay, now can we say it inflated profit? No, we can't say it inflated profit. No. Is exchange gain a fictitious gain? No, it is an actual gain. It is an actual gain. But this gain is coming only in the current year. This gain is coming only in the current year. It will not come up in the next year. Okay, so that's the reason we have to compare. We are comparing this ratio. This ratio is excluding foreign exchange. Okay, because foreign exchange gain will not exist in the future years. It is a one-off event. Now ROCE. Let us compare ROCE. So ROCE. If you are wondering that why I am looking at this side always, because my system is in this side. Okay, so I am solving the question seeing this side. Okay, my camera is this side, my system is this side, so that's why I am looking this side and solving it off. Okay, so if you face any challenge, so just clarity. Okay, now coming to ROCE. If you see, ROCE of Reef company is 22.5%. Okay, and ROCE of Coral company is 11.7%. Right? So now basically what is happening? Reef company operating ROCE is better. Now can anyone define what is ROCE? What is ROCE? For each dollar invested in the business, what is the return that I am earning? For each dollar invested in the business, what is the return I am earning? Okay, now the investment can be made in the form of equity shares or can be in the form of loan taken from the market. Okay, but whatever amount we have invested in the business in the terms of in the form of equity capital or non-current liabilities is called as capital employed. Okay, whatever amount we invest, what is the return that we get on it? Okay, so for now tell me, this aqua company is trying to invest 5.1 million. For each dollar invested, they will get 22.5% return. And in Coral company, only 11.7% return. Now tell me, you only tell me, if you were aqua, tell me you will invest in which company, Coral or Reef? If you were aqua, you will invest in which company, Coral or Reef? In my opinion, if I would have been aqua company, definitely I will consider all other factors, but I will see the ROCE. For each dollar invested, I am getting here 22.5% return as in contrast to only 11.7% return here. Now you might argue that, sir, what about foreign exchange? So even if you take foreign exchange, then also it is 20.5, then also it is 20.5, then also even after foreign exchange, which is one-off event, even after foreign exchange, then also this ratio of 20.5 is lower than that of Reef company. Okay, so ROCE of Coral is significantly lower than that of reef. Okay, this is due to reef's better control over operating costs, and any other reason that you want to say? And lower loan notes, which reduces its capital employed and thereby increases the ROCE. Getting my point? Okay, now further, after okay, ROCE of Coral increases to 20.5%, 20.5% after adjustment of exchange gain, but still it is lower than that of reef. Okay, also right here, also this ROCE of 20.5% of Coral is not sustainable. Why? Because it is adjusted for exchange gain. It is adjusted for exchange gain, which is one of transaction. Right? So how many points? 1, 2, 3, 4, 5, 6. 6 points I have written in financial performance only. Now coming to financial position. Now guys, before I proceed to financial position, tell me, is there any point you think that you will not be able to write in the exam? Tell me guys, come on. Any point that you think that, sir, how will I write this point in the exam? Do you think I have discussed any point like that? I don't think so. Come on guys, tell me please. Do you think, is there any point that you can't write? All the points are very simple points. Do you agree with me? Come on guys, tell me. Right? Chalo. Coming to financial position. Now, ratios. Again, which is the ratio of financial position? Gearing ratio. The gearing ratio is 33.3% of Coral as compared to 125% ratio. And even after adjusting foreign exchange 100%. So right here, Coral appears to be highly geared. Coral appears to be highly geared as compared to that of reef. It is highly geared. Okay. Now further, repayment of loan of Coral is due in 2 years. We saw here, right? See, it has to be redeemed on 31st August 2008. Our is 31st August 2006. So 2 years. Okay. Now, if Coral is unable to repay, it might become an obligation of Aqua if it is acquired. Tell me, Would you like to acquire a company which has an obligation? Tell me, will you like to acquire a company? Will you like to purchase a company? Will you like to make an investment in the company which has an obligation which has to be repaid in 2 years' time? You know, if that company will not be able to repay, I will have to repay this loan, right? So definitely it is a negative point again. It is again a negative point. So now I, in favor of reef, I have lot of points. I have lot of points in favoring reef. Why? What are the points? High profitability of reef, high ROCE of reef, low gearing of reef, right? So I have got 3 positive points for reef. I have got 3 positive points for reef. Okay, now what else? What else? See, the interest expense, the interest expense of coral is much higher as compared to that of reef, which will put undue pressure in times of difficulty, as interest costs are fixed charge on profits. Tell me yes or no, right? 3 points here also. Now tell me, we able to write 9 good points? 1, 2, 3, 4, 5, 6, 7, 8, 9. Done. Is it something very difficult? I believe no, yaar. It is quite very easy to write these simple points. You are not the challenge comes up because we read the suggested answer and we try to match that level. No, my dear friend, no, no, no. You are not expected to meet the level of suggested answer. You are not at all expected to meet the level of suggested answer. Not at all. Okay. You are required to learn from the suggested answer, definitely yes. You are required to learn from the suggested answer, definitely yes. Okay, but you are not required to meet that level. Okay, now coming to control. Now tell me, let us make a table. If aqua acquires coral, if aqua acquires a reef, tell me, if aqua acquires coral, how many shares can it acquire? Company has to make an investment of 5.1 million divided by, what is the share price of coral? What is the share price of coral? Can you please tell me? 6.6. So how many shares can it acquire? 5.1 divided by 6. You can acquire 0.85 million shares of coral. Okay. Now reef, if I acquire reef, how many shares can I acquire? 5.1 divided by 6.25. So how many shares can we acquire? 5.1 divided by 6.25. We can acquire 0.816 million shares of reef. Now tell me, what are the total number of shares of coral and reef? For coral, total shares is how much? Of coral is 2 million, and for reef is how much? Reef coral shares is 1 million. 1 million shares. Now what is the percentage? What is the percentage? 0.85 divided by 2. How much percentage? 0.85 by 2 is 42.5% stake. So if I acquire Coral, I will get 42.5% shares. Now if I acquire this one, 0.816 divided by 1, I will get how much? 81.6% shares. So now will I be able to make control on Coral? Will I get control of Coral? No. We get control when we get for 50%, above 50%, right? So we will get control only in the reef company, right? So now coming to the conclusion. Okay, now we have to conclude which company to be acquired. Okay, Aqua should consider acquiring reef for following. If you're writing only this much, Aqua should consider acquiring reef, you will get 0 marks. You will get 0. See here, 0. Okay, so then what to be done? Okay, you have to write Aqua should consider acquiring reef because, right here, better profitability of reef and lower gearing of reef. Done. Okay, so this is the conclusion. Done. And we are done with this question. Now one student asking, sir, please explain investment part again. So now I have 5.1 million. Okay, I have 5.1 million that I want to invest. So point is, if I invest in Coral, the share price is 6. How many shares will I get? I will get 0.85 million shares. I will get 0.85 million shares. What is the total shares of Coral? 2 million. So what is the percentage that I am getting? Getting 42.5% only. Okay, I am getting 42.5% of the total shares. But if I invest 5.1 million in reef, if I am investing 5.1 million in reef, how many shares I am getting? 0.816 million. What are the total shares of reef? 1 million. So what is the percentage shares I have acquired? 81.6. Tell me, do you think I will get control in 42.5? Do you think I will get control in 42.5? No, I will get control if I have acquired more than 50, which is happening in the case of reef, right? That's why I should acquire a reef company. Tell me, is that clear? So this question, if you write, you can get 20 out of 20. Is it easy to score 20? Is it easy to score 20? Yes, students have done it in the past, and you can do it, okay. If one of my student itself, he scored 20 out of 20 in interpretation of issues on the basis of my performance evaluation. I can say this, he scored 20 out of 20. Okay, now is that clear, everyone? Okay, sir, can we write all the ratios as a percentage? No, you can't write all the ratios as a percentage. The few ratios has to be written in times. Like for example, interest coverage ratio in the times. Few ratios has to be written in days. Okay, inventory holding period, days, right? So depending upon the type of ratios, you have to change the percentage or days, or you can say times. Accordingly, you have to change it off. Okay, so this completes our question number 31. Okay, now we have to move to the next question. Okay, I think this is the first video on the entire YouTube where someone has actually solved it off. Many would have discussed, I have solved. Many would have discussed, I have solved it for you guys. Okay, and this is the exact format how you have to solve in the exam. Okay, this is the exact format how you have to solve in the exam. Okay, chalo. So the next question is from interpretation of financial statements. Now, As I mentioned in the last class, a question of interpretation of financial statements can be any one of these. Either it can be comparison of year on year, same company, but two different years, current year, previous year, you have to compare two different companies. So in the last class, when we discussed September, December 2025 exam paper, we discussed comparison of two companies. Okay, that is Coral and Reef. Now today we have to discuss comparison with sector averages. Okay, so now the question is on the screen. The question is on the screen where a company is into the picture and the question has given you the sector averages ratio, and now you have to compare the ratios of this company with the ratio of the sector and conclude whether this company is outperforming the sector or underperforming the sector. Is that clear? Shall we discuss it, guys? Come on, tell me. Is that clear? Shall we start and discuss the question? Chalo, let us discuss it. Okay. Now, it says Longanet company is the largest supermarket chain in its country. Okay. Its financial information is presented below. Now, Longanet company, just a minute. Now, Longanet company, the extracts of P and L is given here. The extracts of P and L is given here. And the reporting date is 31st March 20x5, and we need to highlight the reporting date. And we have to highlight the reporting date. Okay, now revenue is given, cost of sales are given, gross profit is given, operating expense is given, operating profit is given. Okay. Okay. The extracts of statement of financial position is given here. Okay. Now a question is coming, a query is coming, sir, giving the answer in bullet points in interpretation, will it deduct marks? No, my dear friend, no. You can write your answers in the bullet points, no issues at all. Okay. At FR level, definitely you can write. Now, so statement of financial position is given. So let us read the statement of financial position. It says inventories is given, other current assets are given, equity is given, long-term borrowings are given. Now, can anyone tell me, guys? Again, this is a comment in the examiner report. What will be the capital employed? In this question, can you please read the question and tell me capital employed? Come on, guys. Can you read the question and tell me the capital employed? Come on, guys, tell me. Can you tell me the amount of capital employed? Let me see who can answer it correctly. What is the amount of capital employed? I am getting an answer from Tanya, 15,600. Okay. Any other answers? So please understand, capital employed is the amount invested in the business. Amount invested in the business, whether in the form of equity or long-term borrowings. Okay, equity is 10,000, long-term borrowings is 11,000, which makes the capital employed as 21,000. Okay. Now, one student mentioned 15,600. So they arrived at this way. Is this correct? No, it is wrong. It is wrong. You have to take equity plus non-current liabilities both. If there is a lease liability, will we take lease liability also? Yes. Lease liability will also be a part of capital employed. Lease liability will also be a part of capital employed. Okay, chalo. Now, the averages or the ratios for the sector is given and some additional information is given. Okay, now let us, before reading the additional information, I want to read the requirements of the question. Shall I read the requirements? Chalo. It says, calculate using the pre-formatted table provided, that is, this is called as a pre-formatted table. This is called as a pre-formatted table. Okay. And excluding the gearing ratio, the equivalent ratios for the Longanet company for the year ended 31st March 2005 to compare to the sector averages. Okay. Now, prepare the manual journal entry to correctly account for the convertible loan notes. Where is convertible loan notes? Okay, here it is convertible loan notes. So we'll deal with this also. And part number 2, it says you have to manually pass the journal entry. So students who are saying, sir, we don't know journal entry. Can we pass the FR exam? So please understand, journal entry is the base of financial reporting. Journal entry is the base of financial reporting. Okay. Now, so it says prepare the manual journal entry to correctly account for the convertible loan notes, and having adjusted the relevant line items, calculate the Longanet company's gearing ratio. Okay. So first of all, you have to pass the journal entry to record this and then calculate the gearing ratio. Analyze the financial performance and position of Longanet company for the year ended. Now understand, this question is of 20 marks. 4 marks is for calculation, and again 4 marks is for calculation. So definitely, in my opinion, these 8 marks will be easy for you. These 8 marks will be quite very easy for you to score. Now in this 12, even if you score, see, 12 means 12 points you have to write. 12 means 12 points you have to write. Okay. Now, if you write even 8, you are scoring 8 here and 8 here, 16 out of 20. What else do you need? Right. Now, even if you have a target of scoring 100 out of 100, definitely you have that skill to score 12 out of 12 in this. Sir, how to score 12 out of 12? The practice. The more you practice, the better you become. The more you practice, the better you become. So if you take a pledge, that I will be attending all the 5 days of my marathon, okay, and solving each and every question which I am solving in the class here, you will solve it after the class, immediately after the class, you will solve it, okay, then definitely you will get a strong hold on section C. Okay, chalo. Now, so since we have already read the requirements, now let us read the additional information and then calculate the ratios. So first of all is the convertible loan notes, which I will not read now because for part A it is not required. For part A it is not required, so I will not be reading it now. I will go to the second point. Now these all are the reasons to justify the ratios. These all are the reasons to justify the ratios, right? If you read it, to combat the increased competition from the competitors which earn lower margins, Longanet opened a new range of cheaper budget stores. These opened in the month of Feb and March 2005 following a large publicity campaign. Longanet company owns all the properties and measures these using cost model. However, the competitors hold the properties under long-term leases. Longanet entered into an agreement with the retailer of home furnishings during the year, enabling them to sell these products in its store. Many of these Longanet competitors focus on the retail of food and drinks products only. For the year ended 31st March 2005, Longanet company had an average of 290 employees. So these are the reasons to justify the increase or decrease of the ratios. So as and when needed, we will come to these ratios. As and when needed, we'll come to these information. As of now, I am totally ignoring these information. For now, I am ignoring it. My first priority is to score these 8 marks. My first priority is to score these 8 marks. Okay, chalo. Now, first is gross profit margin. Come on, guys, tell me how to compute gross profit margin. How to compute gross profit margin? Now, in the exam, are you required to write the formula? In the exam, are you required to write the formula? Not at all. Rather, you have to show the workings. Formula will not fetch you even a single mark. Okay, but if you write the workings, it will give you marks. Okay, please understand. Gross profit margin. So gross profit is 4070 divided by revenue is 25320. Operating profit margin. Operating profit is 620 divided by 25320. Now return on capital employed is 620, that is operating profit divided by what is capital employed. We just now calculate 10 plus 11,000. 10,000 plus 11,000. Okay, now what else? Just a minute. Revenue per employee. What is the revenue? What is the revenue of the company? 25320. 25320. Now, what is the number of employees? What are the number of employees? Tell me. 290 for the year ended 31st March 2005. Longanet company had an average of 290 employees. So 25320 divided by 290 employees. Gearing ratio we are not required to compute now. So let us come to the inventory turnover period in days. How to calculate inventory turnover period? So it will be inventory divided by the cost of sales multiplied by 365 days. So what is the inventory? Tell me, what is the inventory? 960 divided by what is cost of sales? 21250. 21250 multiplied by 365 days. Okay. What is trade payables payment period? So what is the balance of trade payables? 4600 multiplied by, sorry, divided by what is cost of sales? 21250. I believe guys you already know these formulas and I am not required to explain the formulas to you. What is the current ratio? It is current assets by current liabilities. What is the current assets? 9590. What are current liabilities? It is 4600. Done. So now can you please compute the ratios and tell me the answer? 16.1%. Operating profit margin 620 divided by 25320. It is 2.4%. This one will be 3% around approx. Now this one revenue per employee, it is 25320 divided by 290. It is 87,310. Inventories holding period is 16 days. Trade payables payment period is 79 days. Current ratio is 9590 divided by 4600 is 2.08 is to 1. Is that clear? So we have very well computed the ratios and we have scored 4 marks. Tell me guys, is that clear everyone? Is that clear everyone? Come on guys, please tell me. Is that clear to all of you? Okay, chalo. How is revenue 87310? Okay, it is 25320. 25320 in thousands. Okay, 25320 is in thousands. So I will take absolute figure divided by 290. That comes to 87310. Buddy, 25320 is in thousands. It is in thousands. Okay, so I have to take absolute figure na. Okay. Dollar. Okay, you all of you want to say, come on, all of you, on the count of 3, 2, 1. How's the Joes, guys? Come on, tell me. How's the Joes, everyone? How's the Joes, everyone? Come on, guys, tell me. Chalo. So we have very well calculated the ratios for 4 marks and it is done, guys. Okay, now we have to come to the requirement number B. Now, prepare the manual journal entry to correctly account for the convertible loan notes. What does that mean? There is something mistake in that. So what is the mistake? What is the mistake? Chalo, let's read it. Longinet company issued $0.8 million 4% convertible loan note on 31st March 20x5, which can be converted into shares or redeemed in cash on 31st March 20x8. The interest is payable annually in arrears. As the holders of the loan notes have traditionally converted these to shares, the entire amount of $0.8 million of proceeds has been classified as other reserves in equity. The similar loan notes without conversion right carry 7% interest rate. Now come here and tell me, guys. Whenever we issue convertible loan note, what does that mean? A portion of the loan note is equity and a portion of the loan note is financial liability. Right? Tell me yes or no. A portion of the loan note is equity and a portion is financial liability. Now what they have done is they have classified the entire amount as equity. Is that correct? No. So understand what is happening here. Please understand. Wrong treatment that they have given is bank account debit to equity. How much? The entire amount of 0.8 million. This is wrong. This is wrong. Then what is correct? Then what is correct? Correct treatment. So we have to find the value of financial liability and equity and then do the treatment of the same. So correct treatment will be value of financial liability will be present value of principal and interest. Okay, so what is the present value of principal? Can you please tell me what is the principal amount first of all? 0.8 million. So I will write it in absolute figures, or let's write in thousands. Let's write in thousands for ease. 800 multiplied by present value interest factor, or I'll say directly 7% is the discount rate multiplied by 0.816. Present value of interest will be 800 multiplied by 4% multiplied by. Can you please add up all the 3? 0.935, 0.873, 0.816. 0.935 plus 0.873 plus 0.816, that comes to 2.624. 2.624. Sir, why have you taken 7%? Because we are calculating the value of pure financial liability. So discounting the cash flows of pure financial liability at a pure financial liability discount rate 7%. Okay. Now this will give us the value of pure financial liability. Basically, we are applying a split accounting of the chapter of financial instruments, if you can recall of it. Okay. Compound financial instruments. 800 into 0.816. That comes to 652.8. And here it is 800 into 0.04 into 2.624, 83.968, 84, 653 you can write. Okay, so the value of financial, therefore value of financial liability is 653 plus 84, which is equals to 653 plus 84 is equals to 737. So now what, therefore what is the value of equity? Can anyone tell me what is the value of equity? It is 800 minus 737, that is financial liability. This will be equity. So 800 minus 737 is 800 minus 737, that is 63. So now that is 763. So this is, now what should be the correct treatment? Tell me now guys, what should be the correct treatment? So correct treatment will be, bank account debit 0.8 million to financial liability. I'll write here 800 for the easy understanding. Here I'll write financial liability is 737 and equity is 63. Okay, now here also I'll make the same changes. Here I'll write here 800 and equity is entirely 800. So now what is the manual journal entry to rectify? What is the manual journal entry to rectify? So we have to debit equity, debit to financial liability. How much? 737. Tell me, do you all agree with me with this journal entry? Do you all agree with this journal entry? Come on guys, tell me. Do you all agree with the journal entry? Okay, because equity was credited by 800. Ideally equity should be only 63, so we have to reduce equity by 737 and we have to increase financial liability by 737. So this is what it is. Now can you compute gearing ratio? Now gearing is debt by equity. Again guys, if the question gives you the formula of debt equity ratio as debt by equity, will you use any other formula? That is debt equity ratio is debt by debt plus equity. Will we use that? No, no, no. Now students are asking why this journal entry. So please understand, this is the wrong treatment, this is the right treatment. I believe you already know how to pass the rectification treatment, right? That I expect. Okay, now coming to the debt equity ratio. Tell me what is debt. Debt is not 11,000 now, it is 11,000 plus 737 divided by, what is equity now? What is equity now? Equity is not 10,000 now. 10,000 minus 737. Do you agree with me? So 11,000 plus 737 is okay, and 10,000 minus 737 is 9263. So 11737 divided by 9263, that comes to 127%. 127%. Is that clear, everyone? Now, So this is the gearing ratio. So with this, you have again scored 4 good marks again. 4 good marks again, done, sorted, right? So now what is done? See, out of 20, you have already scored 8 marks. Now the remaining 12 marks. How will I sort the remaining 12 marks? Please see. So we have to comment. Now our comment should be divided into 3 parts: financial, performance, then financial, position, and then conclusion. Conclusion. Okay. Now, in conclusion, how will we write? In conclusion? How will we write the conclusion? So in the conclusion, you have to write. Okay. You have to analyze. Is Longanet outperformed? Not is, has. Outperformed or underperformed the sector, and why? This is what you have to conclude. This is how you have to conclude. So for conclusion, you will get as good as, just a minute, I will have the marking scheme with me. I do have the marking scheme with me for conclusion. Just a minute. In my opinion, you will get 1 to 2 marks for the conclusion. Okay. Yes. So conclusion, you will get around 1 to 2 marks depending on how you write. For performance, you will get as good as 6 marks. And for financial position, okay, 12, right? So 6 and 2, 8, done. 4. So you're here 4 to 5 marks. 4 to 5 marks here. So this will be the allocation of marks. So one student is asking, how did we pass this journal entry? Okay, chalo. Let me show it to you. Though I think it is very bare minimum to expect this much, but still, chalo, let me discuss. Equity, financial liability. So please understand, what is incorrect treatment? They have written the entire amount as equity 800. What is correct treatment? FL is 737, equity is 63. So what is the rectification? You have to reduce equity by 737 and you have to increase financial liability. So how to reduce equity? So equity will be debit 737 to financial liability credit 737. Is that clear now? Come on, buddy, tell me, is that clear now? Wonderful. Chalo. Coming to the third part, that is analysis. Now, how to do the analysis? So just compare the ratios. Tell me, Gross profit margin is high. Gross profit margin is high. Gross profit margin is high. So we will write here gross profit margin is high for Longanate as compared to that of sector. Why? Now comes the reason why. Only writing high will not fetch you marks. You have to write the reason. Okay, as Longanate is the, if you see here, largest supermarket chain, is the largest supermarket chain in the entire country. Okay, hence it would have obtained economies of scale. What is the meaning of economies of scale? When you produce in large quantities, the cost of production goes down. Right? The cost of production goes down. The cost of production per unit goes down. The cost of production per unit goes down. Okay? Now, so gross profit, not bulk discount, rather I say cost of production. Okay? Economies of scale, yes. Now, operating profit margin is lower. Why? So now it's a time that we should read the reasons also. See, I'm not able to justify why operating profit margin is lower. Operating profit margin is lower as compared to that of sector. Why? To combat increased competition from the competitors. Now the competitors earn lower margins. So Longanate company opened new range of cheaper budget stores. These opened in Feb and March 2005. Now we have opened in the month of March and Feb, we have opened new stores. Now, Wedman, I am not able to read the name, but whoever you are, so please understand the answers or the reasons which you are giving are bookish knowledge, are bookish reasons. Are we required to write those type of reasons in the exam? No. Read the additional information given in the question. Link the increase or decrease of ratios with the information given in the question, and then only you will get good marks in the analysis. Okay, now we have opened new stores, okay, where we are selling cheaper products. Okay, now one student will say, sir, we are selling cheaper products, that's why our operating profit margin has gone down. No, my dear friend, we are selling cheaper products means our gross profit margin will go down. It means our gross profit margin will go down because the cost is less. Na, I am saying operating profit margin is less. It means some operating cost is more. Now the cost to open these stores is an operating cost, right? The operating profit margin is lower as compared to sector because of significant costs would have been incurred in the publicity campaign of newly opened stores. Right? Publicity campaign, yes, very well point. Publicity campaign, rental expense, and other administrative expenses of newly opened stores. These stores, no, okay, fine, done. So we have written the reason for the operating profit margin. Okay. Now further, let's write one more point. Profitability will further go down, will further decrease. Now I'm not saying operating profit, I'm saying overall profitability. I am talking about overall profitability. Why? Profitability will further decrease in next year. Why? Because newly opened stores deal with products with lower margins. Getting my point? Now, what else? Let's read the ratios again. Return on capital employed is higher. Okay, then why? Why is ROCE higher? So what to do? One thing here, you do one thing. Here you write in the bracket ROCE, so that we can write everywhere ROCE. ROCE of Longanet is higher as compared to that of sector. Why? Come on guys, please tell me. Why is ROCE higher? Operating profit margin is low. Operating profit margin was lower, right? So definitely you can't say higher operating profits. No, because operating profit margin was less, right? So the increase of the ROCE is attributed to the capital employed. So we have to find the reasons of capital employed. Okay. Now, ROCE of Longanet is higher as compared to the sector because of capital employed. First of all, write capital employed. Then let us analyze and break it. It is because of capital employed and not due to operating profit, that is for sure. Because operating profit was less, so it would have decreased ROCE, but ROCE is increasing. So let's read. Longanet owns all the properties and measures these using cost model. Its competitor hold properties under long-term leases. Okay. Because of following. So I can write point number 1. Higher lease liabilities in the financials of competitors as they hold properties under long-term leases. Now, higher lease liabilities increases capital employed and thereby decreases ROCE. Okay. Now, it might be the case that competitors would have measured the properties at revaluation model Sir, it is not mentioned in the question. Then why are you saying that? But the question says Longanet company owns all the properties and measures under cost model. So might be the case that competitors would have measured it at fair value model, revaluation model, right? Revaluation model, if we follow revaluation model, the revaluation gain will be accumulated in the revaluation reserve, which will increase the equity, which will increase capital employed. This will increase capital employed and thereby decrease ROCE. Okay, done. So this is also done. What's next? What's next? Revenue, return on capital employed also done. Now revenue per employee. Revenue per employee. Revenue per employee of Longanet. Just check, is it higher or lower? Is it higher or lower? If I can recall, it was lower. It is lower. So for the sector, it is 94250. But for Longanet, it's 87310. Revenue per employee of Longanet is lower as compared to sector. This prima facie indicates inefficient management of employees by Longanet. However, this could also decrease due to new employees hired in newly opened stores, which will fetch revenue only in the next year. Right? Since we have opened up the new stores, we would have hired employees in that store, right? So the number of employees increases. The number of employees increases. But understand, revenue per employee is a factor of revenue and number of employees. Number of employee increased. But tell me, we opened the store just in the month of March, last month of the year. Tell me, do you think revenue would have increased? No, revenue would not have increased, right? So revenue will increase in the next year. For the full year impact, it will come only in the next year. That's why it would have decreased. Revenue per employee would have decreased. That's the reason. That might be the reason. That might be one of the reason. Okay. Now, this is for I think how many points? 1, 2, 3, 4, 5, 6 points we have written. 6 marks, 6 points. Very well written. Is that clear, everyone? Come on, guys, tell me. And tell me, have I written something really out of the box? Have I written something really out of the box? I don't think so, yaar. I don't think so. Okay. I think we have written fairly good points, easy to understand, easy to explain, nothing beyond the box, nothing out of the box. Chalo. Now coming to the financial position. Gearing of sector is 68 and Longanet is 127%. Oh my God. Highly geared company. Okay. Now, it appears, now understand, Longanet is highly geared in comparison to the sector. Why? Tell me why. If you can recall of it, it said that the company owns all the properties, right? It appears that Longanet would have used significant borrowings to purchase properties. To purchase properties. Okay. Now, Prakash is saying due to convertible debt. See, convertible debt that is issued is only 737, right? But if you see, the company has 11,000 of non-long-term borrowings. Just see here. What is the, see, this is the total debt that the company has. Non-convertible debt, sorry, convertible debt, convertible debt that the company has issued during the year is only this much. Apart from that, also the company has 11,000 of borrowings. Why? Might be company have used the borrowings to fund the purchase of new assets or to fund the purchase of new stores. Okay. Then what else? Gearing is done. What else? Inventory turnover period. 16 days, 13 days. Any comment on that? Any comment on that? See, we have used this one. Now, Longanet company entered into an agreement with a retailer of home furnishings during the year, enabling them to sell these products in its stores. Many of the Longanet's competitors focus on the retail of food and drinks products only. Higher inventory holding period. Why? This could be due to lower inventory period of competitors as they deal with foods and drinks which are perishable in nature. Okay. Further, you can write one more point. Further, if Longanet deals with perishable goods, then higher inventory holding period is a area of concern. Is an area of concern. Is that clear? Chalo. Then what else? Trade payables payment period. Higher trade payables payment period. Okay, which is a good sign, I believe. Higher trade payables payment period of Longanet company. And tell me why. Why it is higher. Why do you think it is higher? Might be due to better, you can say, a reputation in the market, right? When you have a better reputation, you get better credit. When you have a better reputation in the market, it means better credit. Okay, in the higher trade payables payment period of Longanet, okay, enjoyed by Longanet is enjoyed by Longanet as compared to sector. This might be due to a better reputation in the market, as it is the largest supermarket chain. Right? If you become large, you become reputed. That's how the situation works. That's how the market works. The more large you become, the more reputed you become, right? If you see top personalities or celebrities, even if they do something wrong, then also we respect them, right? Then also we respect them. If we see very persons at the bottom line and they are very good as a person, then also we might not respect them, right? So the large you become, that's how the world works, guys. That's how the world works. Okay, the more you reach at the top, the more respect you govern in the market. Okay, sir, you were teaching FR, you came into psychology. Okay, no issues. Chalo. Higher trade papers, payment paid also done. What else? Current ratio. Current ratio is how much? 2.08 is to 1 and it is 1.8 is to 1. Higher current ratio of longanate represents that it is able to manage its current assets properly and is very well able to repay its current obligations. Sorted. Right? So how many points we wrote here? 1, 2, 3, 4, 5. Right? So 6 points here, 5 points here, 11 points done. Now 1 point for conclusion. How to write the conclusion? So now overall, tell me, what do you see? Overall, tell me now. Overall, is the longanate outperforming or underperforming? I think, see, gross profit is high, ROCE is high, operating profit margin is low, but that is a one-off event because of you can say opening of new stores, right? So otherwise profitability is higher. Everywhere the profitability is higher, right? So I can say first of all, I'll conclude overall the profit overall longanate has outperformed the sector. Okay, now you have to just writing this. Will it fetch you mark? No, you have to justify your point. Why? Because it is because of higher but not higher, right? It's a better profitability, then strong liquid funds because the current ratio is higher. Okay, further, new stores being opened representing growth and okay, and take it now this one. Further, the company is highly geared, but it is stable as it has sufficient properties as well. Done. That's all. Okay. Sir, how can you write sufficient properties? It is nowhere given the question. But because, see, we have assumed now that the loan has been taken to purchase properties, right? So you can write that also. You can read from the sentence. It is highly geared, but it is stable as the loans are obtained against properties. You can read from the sentence anyways, right? So this is how you have to write the answers in the exam. Tell me guys, is that clear to all of you? Is that clear to all of you? So we have written A, B and C all, right? 12 marks. If you can see, I have written 12 good points. Just 12 good points. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Right? You can just make it 2 points ideally. Done. Okay, so this is how we have to write the answer in the exam, and I believe these sessions is and will be helpful for all of you. On this note, now tomorrow we are going to discuss which paper. Tomorrow we are going to discuss September December 2024 exam paper. September December 2024 exam paper. Okay. Now, this question is from the interpretation of financial statements. Okay. Now, let us read the question first of all and try to solve it off. Okay. Let me open the examiner report also for this question, because I have highlighted the comments which I will be discussing with you guys. Done. The directors of clocking purchased 80% of the 100 million ordinary equity $1 shares in stopping on 1st April 2008. Okay, this is an interpretation of the group FS. This is an interpretation of the group FS. So if you can recall, I mentioned in the very first class itself, the questions that comes up can be from comparison of year on year, comparison of two companies, comparison of sector or industry averages, acquisition of subsidiary, disposal of subsidiary, right? So please understand, let me highlight that. For September December 2025 question paper was interpretation from this part. March June 2025 question paper was from this one. Now today is September December 2024. It is from this one. Okay, if you are able to notice, they are asking on a circular basis. Okay, now, so ideally, even if I'm doing all these analysis, don't try to find out a way to identify which question will be asked in your attempt, because you will not be able to identify, because ACCA, understand, you will not be able to predict the paper in any case. Okay, why? Multiple reasons. Point number one, the paper which is released by ACCA is a hybrid paper. March June 2025, September December 2025 means what are the best question from September 2025 exam, December 2025 exam? It is this one. Now in every exam they prepare 3 to 4 sets of question paper, and in each question paper, some question paper will have group accounting, some question paper will have interpretation, some question paper will have single entity. So you never know which question will come to you. Okay, so will you be able to predict the paper? In no scenario will you be able to predict the exam paper in any case. Okay, there are multiple videos that circulates in the before the exam, that paper prediction. Okay, so I will strongly recommend you, don't go behind paper predictions. Okay, don't go behind paper predictions. No one can predict the paper. Even ACCA, if you ask them, if you ask ACCA, can you please tell me which paper will I get? Even ACCA doesn't know. Okay, so don't go for paper predictions in any manner. Chalo. Let us discuss this question. The directors of clocking company purchased 80% of the 100 million ordinary equity, okay, in the stopping company. The consideration comprised of one of four share exchange. There was also immediate cash payment of $2.8 per share, and a further $2.7 per share is payable on 1st April 2009. On 1st April 2008, the market value of each equity share in clocking company and stopping company was 12.5 and 8 respectively. Okay, now the retained earnings of the company are given. For the subsidiary company, retained earnings is given. Profit earned by the subsidiary company during the year is also given. The company has a policy of valuing non-controlling interest at fair value and has a cost of capital of 8%. This appears to me a question of group accounting. Okay, the directors of clocking have accounted for the acquisition of stopping company correctly. Okay, the consolidation has been done correctly. Okay, and there are some additional information given. Okay, now what is the requirement? What does the requirement ask? Calculate the goodwill. So now again see here for the students who say, sir, my interpretation is weak, please see here, 20 marks question, 5 marks for calculation of goodwill. Will you be able to solve it? Very well, easy marks. 5 marks for computation of ratios, again easy marks. So out of 20, 5 plus 5, 10 easy marks. Then again 2 marks for the limitations, very restricted answer, right? Very small answer. Again 2 marks also gone, right? So 5 plus 5, 10 plus 2, 12 marks are very easy peasy. You have to write analysis only for 8 marks, right? So even out of 8, you are able to write 5 good points or 6 good points, which definitely I believe you will be able to write 6 points in the entire question. You think you will not be able to write 6 points? Definitely yes, 6 points is very easy to write, right? Now, so 5 plus 5, 10, 10 plus 2, 12, 12 plus 6, 18 marks. So out of 20, you are very easily able to get 18 marks out of 20. That's a good score. Okay, chalo. Now we have to compute first of all goodwill. Okay, so for that, let me include the table first of all. Now, how to compute goodwill? Goodwill is purchase consideration. Add, since NCI is at fair value method, so I'll write here fair value of NCI on date of acquisition less fair value of net assets on date of acquisition. That will give you the goodwill. Sorry. Chalo. Let us compute the values. The directors of clocking purchased 80% of the 100 million ordinary shares in stopping company on 1st April 2008. So we have acquired on what date? 1st April. So this is the date of acquisition. Please keep in mind. What is the reporting date? Reporting date is 30th September 2008. Again, keep in mind. So means subsidiary is acquired in the mid of the year. Purchase consideration. Please understand. Cash payment. What is the amount of cash that you are paying? Cash payment is how much? 80,000 shares multiplied by 2.8 is cash payment is equals to how much? 80,000 into 2.8 is 224,000. Chalo, what else? And a further cash of 2.7 per share is payable on 1st April 2009. Is payable on 1st April 2009. Means it's a deferred consideration. We have to compute the present value using the cost of capital of 8%. So fine. Present value of deferred consideration, which will be equals to 80,000 multiplied by 2.7 divided by 1.08. So what is the amount? 80,000 into 2.7 divided by 1.08 is 200,000. Then what? Then what else? What else? Share exchange. Share exchange. So fair value of share exchange. So what is the fair value of share exchange? 1:4. So it is equals to 80,000 multiplied by 1/4. Now, so this is the number of shares that will be issued by the parent company, that is clocking company. So what is the fair value per share of clocking? 12.5. So what is the amount? 80,000 by 4 into 12.5, 250,000. Done. Anything else? No. So what is the value of purchase consideration? What is the value of purchase consideration? 250,000 plus 224,000 plus 200,000. It is 674,000. I believe it is very much clear to all of you. I believe it is very much clear to all of you. Now, what is the fair value of NCI on date of acquisition? So how many shares NCI has? 20,000. Total shares was 100 million and parent has 20,000 and NCI has, parent has 80,000 and NCI has 20,000. Okay. Now what is the share price of subsidiary? 8. So fair value of NCI is 160,000. Now fair value of net assets. Fair value. So what is the share capital of subsidiary? What is the retained earnings at 1st October 20x6? What is the profit till 1st April 20x8? Not x, this is x7. Share capital is how much? 100 million, so means 100,000. Retained earning at the opening of the year is 610,000. Profit here is how much? 88,000 for the entire year, but we have to take till 1st April, means October, November, December, January, Feb, March, 6 months multiplied by 6 by 12, that is equals to 44,000. So what is the amount? 100,000 plus 610,000 plus 44,000, that comes to 754,000 minus 754,000. So what is the goodwill? $674,000 plus 160,000 minus 754,000. It is 80,000 is the value of goodwill. Is that clear to all of you? Come on guys, can you please tell me, is that clear? Goodwill is clear to all of you? Is the goodwill clear to all of you? Is the goodwill clear to all of you? Chalo, done. So first paragraph, first part for 5 marks, done. 5 marks sorted, 5 marks sorted. Now comes the next. Now comes the next. Ratios. Chalo, let us find out the ratios. Let us find out the ratios. Pre-formatted table is already given. We have to find the ratios using the extract of the financial statement for current year and for the previous year both. Chalo, let us do that. Gross profit for, first of all we'll do it for 20x8 and then we'll do it for 20x7. Okay, chalo. Gross profit is 157,250 divided by 418,000 Operating profit margin is 96777 divided by 418000. Return on capital employed is 96777 divided by, what is the capital employed? Capital employed is debt plus equity, that is 1168 287 1168287 plus 387,000. Okay, then what is net assets turnover ratio? What is the formula for net assets turnover ratio? It is revenue by capital employed. Revenue is how much? 418,000 divided by, what is capital employed? Can you please add up and tell me? It is 1168 287 plus 387,000, that is 1555287 1555287. Now gearing ratio is debt by equity. So what is the debt? Debt is 387,000. Equity is 1168287. Now what is your interest coverage ratio? What is your interest coverage ratio? Tell me guys. Interest coverage is the operating profit 96777 divided by interest is 10067. Okay, now can you please tell me the ratios? Can you please tell me the ratios? 37.6%, 23.2%, 6.2%. Net assets turnover ratio is 0.27 times. Gearing is 33.1%. Interest coverage is 9.6 times. Chalo, let us do it for 20x7, the previous year. Okay. Now gross profit again, 158,520 divided by 340,400. Then operating profit is 101,482 divided by 340,400. Then return on capital employed is 101,482 divided by, what is capital employed? Debt plus equity, that is in the bracket 852,305 plus 104,000. Now what is net assets turnover ratio? It is revenue by capital employed. Revenue is 340,400 divided by, what is capital employed? 852,305 plus 104,000. It is 956,305. 956,305. Gearing, debt by equity. So what is debt and what is equity? Debt is 104,000 divided by equity is 852,305. 852,305. Now interest coverage is operating profit is 101,482. 101,482. Interest is 3187. Chalo, let us tell me the ratios for the previous year. 46.6%, 29.8%, 10.6%, 0.36 times. Gearing is 12.2% and interest coverage is 31.8%. Okay, because I know you guys don't give me answer, so what I have done is I calculated the ratios beforehand and I came the class. Okay, I have calculated the ratios. I've already calculated the ratios and came. Okay, so final numbers I already had with me. Okay, but just that I wanted to show how things work. That's why I calculated in the class also. But ideally I had the final numbers. So 5 plus 5, 10 marks, sorted. 5 plus 5, 10 marks, sorted. Is that clear, everyone? Is that clear, everyone? Okay, chalo. Now we have to write about the performance and the gearing. So what you have to write? Analyze the comparative performance and then the gearing for the year and comment on the limitations of the ratios. What are the limitations of the ratios? Okay, and then conclusion. So our analysis will be divided into 4 parts. First of all, we will have to comment on the financial performance. Then we have to comment on the gearing. Then we have to comment on the limitations. And then we have to comment on the conclusion. These 4 things. Now, how will you divide the marks? 1 mark, total 10 marks, right? 1 mark here. Sorry. 1 mark here. 2 mark here. Then 7 marks remaining, right? So you can write here 2 points here and 5 marks here. 5 marks here. Chalo. First of all, I will write the limitations. Tell me, please understand. The subsidiary has been acquired in the current year, right? The subsidiary stopping company is acquired in the current year. So the current year is parent plus subsidiary, but previous year was only parent. Previous year was only parent. So first limitation I can write here. The first limitation I can write here is the financial statements are not comparable. Are not comparable. Why? Because financial statements of 20x8 includes stopping for 9 months, but the same was not there in 20x7. Okay, it was not there. Second limitation, individual second point, individual financial statements of stopping is not provided. So we have fairly 2 limitations with us. Okay, because individual understand whether due to acquisition, profits might increase, profits might decrease or decrease, anything can happen, right? So if we are saying it is either increase or decrease is due to stopping company, so we have to see individually what was the profitability of parent, individually what was the profitability of subsidiary, right? So individually the profitability of parent we can see from the previous year, because previous year subsidiary was not there. But do we have the financial statements of subsidiary to see the individual profitability of the subsidiary? No. Okay, to evaluate individual profitability of stopping and the impact it would have on consolidation. I believe it is clear, everyone, the limitations. So 2 marks again sorted, 2 marks again sorted, right? Now coming to financial performance. Okay, but before writing the performance, let's read this additional information we have not yet read. Clocking company has suffered decreased revenue in recent years. This, which directors believe, is mainly due to general economic downturn. The falling sales were the main reason for the investment in stopping company. Now, in the conclusion which you are writing, you have to conclude whether the objective of acquisition of stopping is met or not. What was the objective? Declining. Okay, to reverse declining, decreasing, falling, to reverse falling sales and profitability. Okay, this was the objective. So we have to conclude by this one. We have to conclude by this one. Now coming to financial performance. Okay, now under again read it. Clocking has suffered decreased revenue in the recent years, which director believe is due to general economic downturn. The falling sales were the main reason for the investment in stopping company so that the clocking company could have more control over its competitors. To encourage customers to continue purchasing from the clocking company throughout the economic downturn, many products are now being sold at significantly discounted prices. Now we are selling at discounts. So what does it mean? If we are giving discounts, we are increasing the discounts in the current year. Tell me what will be the impact in the current year? The gross profit margin will go down. The gross profit margin will go down. To assist in generating future revenue, clocking had taken a loan of 25 million in the current year. Okay, chalo, let us now evaluate. The gross profit margin has went down. It is very much evident. It was very much evident. So let's write here. Gross profit. Somehow we knew this part will happen. This is going to happen. Gross profit margin has decreased as compared to 20x7, and okay, this is primarily due to general economic downturn. Okay, this is due to general economic downturn, which led to significant discounts. Since we are giving discounts, the sale price going down, cost remaining same, gross profit falls. Okay, now what else? Your operating profit margin is also falling. So let's write here, operating profit margin has also decreased as compared to 20x7. Now comes the reason why. Just see here. It has decreased. Why? Why? Because I can see the reason is this is due to a carry forward impact. This is due to a carry forward impact of decreasing gross profit margin, right? Let's see if that's the case, right? Gross profit margin has decreased by 46.6 minus 37.6, that is 9%, and operating profit margin has decreased by 29.8 minus 23.2, 6% only, 6.6%. Okay, so operating profit margin has fallen less as compared to fall in the gross profit margin. Okay, so let's write that also. The decrease in operating profit margin is less as compared to decrease in gross profit margin. This represents a better control over operating costs. This represents a better control over operating cost. Now we need to keep in mind that since we have acquired a subsidiary during the current year, we would have incurred some operational cost for that, right? The acquisition related costs. This would have increased the operating expenses and further decreased the operating profit. But still the operating profit margin is not decreasing by that ratio. So it's a better control over the cost. So let's write that also. Okay, let's write that also. In spite of acquisition of stopping, which would have led to many acquisition, not many, which would have led to acquisition related costs, thereby increasing the operating expenses. Okay, thereby increasing the operating expenses. Still, if still the operating margin is falling less as compared to gross profit margin, is a good sign, is a good control, better is a good control over, is a good control over operating costs, is a good control over operating costs. Are you able to understand what I'm trying to say? Come on guys, tell me. Right, we have to write 5 points, 5 marks, 5 points. We have written 4 points already. What else? One, ROCE. ROCE. What is happening in ROCE? See, ROCE is decreasing again. ROCE is decreasing again. So right, see again, understand this point. Even if you don't write, it's completely fine. Okay, ROCE, decrease of ROCE, decrease of ROCE. Now, since we are writing ROCE, let's define that here. ROCE, decrease of ROCE is mainly due to point number 1, carry forward impact of operating profit margins. Okay, and see, if you see the capital employed has increased significantly. And why? Because of new issue of shares. Increase in capital employed due to new issue of shares, okay, which was issued to acquire stopping. Again done. ROCE also done. Then what else we can write? Net assets turnover. Net assets turnover is falling. See, revenue is increasing. Still net assets turnover is decreasing. Okay, why? Because again the same reason, capital employed. Okay, net assets turnover. Okay, I'll write here NATO, and I will have to define there NATO. NATO is decreasing. Why? Because of increase in capital employed. Due to increase in capital employed. Done. So we have written a lot of points. 1, 2, 3, 4, 5, 6, 7 points. We've written as good as 7 points, right? So even if you want to eliminate this point, you can do that. Even if you want to eliminate this point, you can do that, right? So now, is that doable? Yes, I believe very well doable, right? This point is very easy to write. This point again very easy to write. This point again very easy to write, and this point again very easy to write. These 2 points, yes, where something really needs application of brain. So which, even if you're not able to write these 2 lines, fine, no issues. Now gearing. What is the impact on gearing? Please see. Gearing has increased significantly. Gearing has increased significantly. Gearing has increased significantly. Okay, from 12.2 to 33.1. 12.2 to 33.1%. Okay, This is mainly due to new loans taken of how much? 387 minus 104 is equals to how much? 387 minus 104 is 283 million, of 283 million. Okay, now out of this, loan of 25 million is obtained to fund future operations, and then you can write no information is given about other loans. This could be the loans of stopping which is consolidated. Okay, this could be the loans of stopping company. Okay, now interest coverage has decreased significantly. See here, interest coverage from 31.8 times to 9.6, decreased significantly, which is a high risk. Okay, now, so we have done about gearing also. Now we have to write the conclusion. Whether the objective was to reverse sales and the reverse falling sales and the profitability, is the objective met? Guys, tell me, is the objective met? No. So right here, the objective of clocking to acquire, stopping to reverse falling sales and profitability is not achieved, as profitability further sees a dip, a decrease, a decline. Okay, now the stopping company is highly geared. Okay, a further analysis, or I can say further the stopping company is appears to be highly geared, which can be a high risk. Done. The conclusion also done. Right now, in this question of 20 marks, I believe this 5 marks is very easy. This 5 mark is also very easy. So 5 plus 5, 10 marks is very easy. Now 1 mark easy, 2 marks easy. So 10 plus 2, 12. These two were tricky, I understand. But let's suppose if you remove these. Okay. So till now you scored 12. These 3 were again easy. 12 plus 3, 15. Again, these 2, this is not 4. Okay. This is 3. So 12 plus 3, 15. 15 plus 3, 18. 18 plus 2, 20. 20 plus 1, 21. Still you have written more than 20 marks. Right? Even if I remove the tricky parts, you have lot of points to write. Okay. Now Prakash is asking, do we have to write suggestions? Yes, we have to write. Just writing the objective is not met is not sufficient. You have to write why are you saying the objective is not met, because the profitability further sees a decline. Okay. So in this question, even if we eliminate the tricky reasons, then also you have 20 fair points to write in the exam. Tell me guys, is that clear to all of you? Come on guys, tell me, is that clear to all of you? I believe these sessions would have really helped you. Okay, these sessions would have really helped you, and I request all of you, if you like these sessions, okay, drop a genuine feedback, a comment, okay, appreciation or an improvement point if you have any in the chat box once we wrap up the session. That's all for today. Thank you guys. Bye bye. This is CA Vishal Jain signing off. See you tomorrow. Now tomorrow we will be discussing March-June 2024 question paper. March-June 2024 question paper will be discussed tomorrow. That's all for today. Thank you guys. Bye. And do not forget to leave a feedback. Now, the Plendel Group owns 100% of Holloway Company in addition to several small subsidiaries. Okay, there are multiple subsidiaries that the Plendel Group has. Okay, and the Holloway Company is 100% subsidiary. Needless to mention, it's 100% subsidiary. On 31st December 2008, it received an offer to sell Holloway for $121 million, which it is considering. The Plendel Group has just completed the preparation of its consolidated financial statements for the year ended 31st December 2008, extracts of which are shown below. Okay, so the reporting date is 31st December 2008 is the reporting date. Selling the subsidiary at $121 million. Okay. Now, the consolidated financial statements are already prepared. Now, this is the console P&L given. Now, the information is given. Now, requirement. Calculate the Plendel Group's potential gain or loss on the disposal of Holloway Company. So now this is the first requirement which I will cater to. Now again, since it's an interpretation question and I have noticed, and students do come to me before exam, sir, interpretation comes in the exam for 20 marks, and students say, sir, I am weak at doing analysis. So the only answer which I can give you here is, see, analysis comes for 20 marks, right? Now out of these, 5 marks is pure calculation. These 4 marks ratios, again pure calculation. 5 plus 4, 9 marks, easy marks. Tell me yes or no. 5 plus 4, 9 marks, easy marks. Now out of 11, even if you write 5 or 6 good points, which I believe you can definitely write, even if you are not at all good at doing analysis, even if you think you are a very below average student, then also if you have done a little hard work, or even if you have just watched all these 5 past paper series, just this 5 past paper series, even if you have watched it, I can give you a guarantee that out of these 11 marks, you can at least write 6 or 7 points. Okay, taking 6 points only. 5 plus 4, 9, 9 plus 6, 15. You are able to score 15 out of 20 for a question which you are not that strong, which is your weak area. In that weak area question, you are scoring 15 out of 20. What else do you need in that? But if you are, if you are someone who is strong in interpretation, definitely you should target around 18 or 19 out of 20 in these questions. Okay. Scoring 20 out of 20 is also very much possible. Now, calculate the Plendel company's potential gain or loss on disposal of Holloway. The directors of Plundle wishes to assess the impact of disposal. Okay. As a result, they wish to exclude all the transactions associated with Holloway Company for the financial statements for the year ended 31st December 2008. Okay, fine. We'll discuss that. But first of all, calculate the Plundle Group's potential gain or loss on disposal of Holloway. So now tell me, requirement A, gain or loss on disposal. Now tell me, how do you compute gain or loss on disposal? How do you compute? Let me insert table and compute. So first of all, we write what? First of all, we write what? Sale proceeds. Sale proceeds. Okay. Then less what? Net assets. We will reduce what? Net assets. Add net assets plus goodwill minus NCI. This is what we have to reduce. This is what we have to reduce. Now, since it was 100% subsidiary, so no question of NCI. So let us remove NCI. So now we will reduce net assets and goodwill. Goodwill, net assets on date of disposal, on disposal date, and here goodwill also on disposal date. Okay, now so this will give me gain or loss on disposal. This will give me gain or loss on disposal of Holloway. Sorry. Now, tell me, what is sale proceeds? We know 121 million. We very well know 121 million. Okay, but what I write the figures in thousands because the figures are in thousands. So I will write in thousands. Always make a note of it. The format which is used in the question is the format which you will use in your presentation of the answers. Now, net assets on the date of disposal. What are the net assets and what is the goodwill on disposal date? So we don't know these two things. So we have to find out. So I will write here working note 1, and I'll write here working note 2, and I'll prepare here working note 1, goodwill on date of disposal. Tell me how to calculate goodwill. First of all, purchase consideration. Then less what? Since it is a 100% subsidiary, it will be net assets on date of acquisition. Okay. Now, what is the net assets on date of acquisition? Is it given in the question? Just see. Prindle Company acquired the 20 million share capital of Holloway on 1st January 2004 for 88 million. Okay, so the purchase consideration is given as 88 million. At this date, Holloway Company had a retained earnings of 20 million, share capital of 20 plus retained earnings of 20 plus Holloway also had a land which had a fair value of 30 million in excess of its carrying amount plus fair value adjustment of 30. So 20 plus 20, 40, 40 plus 30, 70,000. Okay, so this gives you goodwill on date of acquisition, 18,000. Okay, now any impairment of goodwill, just see any impairment of goodwill. Yes, Goodwill is in the Holloway has been impaired by 4 million since acquisition, and out of this 4 million, 1.5 million has been impaired during the current year due to the news that Holloway's one major customer was lost. So impairment is 4,000. So goodwill on reporting date is 14,000. Goodwill on reporting date is 14,000. So we have this answer 14,000 now. But we are still to arrive at net assets on date of disposal. So chalo, let us find that also. Now retained earnings on the disposal date is 42 million. Okay, so we can no need of working to, we can calculate it here itself. So share capital will be 20 plus retained earning is 42 plus retained earning is 42. Okay, and land fair value adjustment also 30 plus 30 land, since the land is not depreciated, so there is no depreciation of this one. Okay, so this becomes how much? 20 plus 42 is 62. 62 plus 30 is 92,000. So what is the amount here? Can you please tell me? 92 plus 14. 92 plus 14 is 106,000. 106,000. So what is the value of gain or loss on disposal? 15,000. Tell me, is it clear? 5 marks sorted. Tell me guys, come on. Was that difficult? I don't think so, yaar. I don't think it was difficult. It was quite very easy to score these 5 marks. Very simple, plain, easy marks. Right? Come on guys, tell me please. Now, moving on to the next part. Requirement B. Requirement number B is the calculation of the ratios. Okay? Requirement B, ratios. But now let us read the question first of all. Make necessary adjustments and recalculate the ratios. What adjustments? Read this line. The directors of Plendal wish to assess the impact of potential disposal of Holloway. As a result, they wish to exclude all transactions associated with Holloway company. They wish to exclude all the transactions associated with Holloway company from the financial statements for the year ended 31st December 2008. They wish to exclude it. Okay, and then compute these ratios. So now see here, the question is given you the ratios for the previous year, for the current year, but these ratios are including Holloway. We have to compute the ratios for the current year excluding Holloway, because the extracts of Holloway's financial statements are given to you now. Individual FS of Holloway is given to you now. So how will you compute the ratios? So I will write here 3 ratios: workings, current year, previous year. So right here, ratios, workings, 20x8 excluding Holloway, and it is again 20x8 including Holloway, and 20x7, this is also including Holloway. Okay, now first ratio which we have to compute is GP margin, second is operating profit margin, and third is interest cover. That's all. Now the question has already given you the data of this one: 46.1%, 20%, 3.5 times. Question has given you the data for this one: 47.6%, 24.2%, 3.8 times. Even if you don't draw these two columns in the exam, it's completely fine. Then sir, why are you drawing? But for the sake of easy comparison, when you have the ratios parallelly available, you can compare it well. Okay, now the workings for excluding Holloway. Okay, now tell me guys, come on, first of all let us calculate the ratios. For 20x8, gross profit margin is 39,800 divided by 86,400. Sir, this is including Holloway na? Yes, I will exclude Holloway towards the end. Then operating profit margin is 17,300 divided by 86,400, and interest cover is 17,300 divided by 4,900. Okay, now let us exclude the figures of Holloway. Revenue of Holloway is how much? 33,500. 33,500. Okay, now what is the gross profit margin excluding Holloway? Gross profit is 18080. Operating profit, let's remove the operating profit of Holloway, 13580. Let's remove the operating profit of Holloway, minus 13580. Okay, now not only this, we are also required. See, the impairment loss of 1.5 million is for the current year, which would have been recorded in the operating profit margin, right? So if we are removing the impact of subsidiary, we have to remove all the impact, right? So we have to do plus 1,500 plus 1,500, okay, for the impairment, for the goodwill impairment. Now, can you please calculate the ratios and tell me the amounts? Tell me the percentages. Come on, guys, tell me. Can you please tell me? It will be 41%. This will be 9.9%. And this will be 1.7 times. Tell me, is that clear, everyone? Now we have all the three ratios available with us. Was that difficult? Come on, guys, please tell me. Now we just first of all took the entire 20x8. We removed the impact of Holloway. We removed the gross profit of Holloway. We removed the revenue of Holloway. We removed the operating profit of Holloway. We removed this one also from Holloway. Operating profit here also we'll have to add 1,500. Okay. Okay, now we have removed the impact of Holloway everywhere. Whatever is the impact, we have removed that impact and recalculated the ratios, and I believe it is quite very easy, which you can easily do it off. Clear, everyone? Okay, now the question might arise in your mind, sir, why 1.5 million we have added here? Because we have to remove all the impact of subsidiary. Now, so this 1.5 million is the goodwill impairment for the current year. It would have reduced the profit since we are removing the impact of subsidiary Holloway. So we have to increase the profit. Okay, done. So I believe we have fairly dealt with this part. 5 plus 4, 9 marks, fairly done. Tell me guys, clear everyone? Is this 9 mark clear to everyone? Are you confident on these 9 marks? Are you confident on these 9 marks? Now we have to focus on the rest 11 marks now. Okay, but before moving on to the rest 11 marks, I will strongly recommend you to first of all draft the how exactly the marking scheme will work, understand that, and then write the answer. C, analysis on financial performance. Read the question C. Analyze the performance of Plendal Group, not the position, only the performance for the year ended 31st December 2008 and 2007. The answer should specifically refer to the potential disposal of Holloway company. Parul, that's what I explained right now, because 1500 is the goodwill impairment of subsidiary. Okay, since we are excluding the impacts of subsidiary, we'll exclude this impact of 1500 also. Now, what is the treatment already done of 1500? We would have increased the cost, thereby reduced the profit. Okay, the goodwill impairment will reduce the profit. Okay, since we are excluding the impact, we are increasing the profit by 1500, increasing the profit. Okay, chalo. Now let us comment on the financial performance. No financial position, only financial performance we have to comment. Only financial performance. Okay, so we have to comment on the financial performance, and we have to give towards the end a conclusion. Now what should the direction of the conclusion? What should be the direction of conclusion? Decision should be, is the decision to dispose of Holloway good or bad? This should be your conclusion. Now you will get 1 to 2 marks for conclusion, and the rest 9 to 10 marks are for analysis of financial performance. I believe it is very much clear to all of you. Can we skip conclusions? Let's suppose if there is a student who has written, see, part number C is for analysis of financial performance. Okay, so if there is a student who have written 11 points for financial performance, will he get 11 marks? No. You have to write at least 1 mark for conclusion, at least 1 point for conclusion. Even if you write 13 points here and don't give conclusion, you will get a maximum of 10 marks only, because 1 marks is always, at least 1 mark is always and only for conclusion. You have to give conclusion. You can't skip conclusion. You have to give conclusion. Okay, that is one of the major comment of the examiner, that students do not give conclusion, or even if they are giving conclusion, that's vague. They're saying no, the decision to dispose of Holloway is not correct. Arey Baba, tell me why. You have to tell why. You have to tell it why. Now, so before I start the performance, I will read the information entirely once. Plendal company acquired all the $20 million one share capital of Holloway on 1st January 2004 for $88 million. At this date, Holloway company had a retained earning of $20 million. Holloway company had land which had a fair value of $30 million in excess of its carrying amount. The fair value adjustment has not been reflected in Holloway company's individual financial issue, but still exists at 31st December 2008. Okay, it says this fair value adjustment on land has not been reflected in the Holloway company's individual FS, because the fair value adjustment happens in the group FS. Okay, but it exists on 31st December 2008. Fine. Holloway company has a retained earning of this much. Goodwill has been impaired by this much, and in the current year the goodwill has been impaired by this much due to the loss of one major customer. Now, Plendal company develops computer games. Plendal means the parent, develops computer games Holloway company makes and sells packaging material, means they are into different sectors, different business. Plendel acquired Holloway thinking it could utilize the packaging material in its games, but has now found little need for them as gaming has moved online. Okay. Earlier, if you go 10 years back, or not 10 years, 7, 8 years back, okay, gaming used to come in a packages, right? Gaming used to come in packages. Okay, now everything is online. Now everything is now as of now also the PS4, all those gaming system, they also come in packages. They also come in packages. The big gaming system still comes in big packages. Okay, so the Plendel company is into games. So now they thought that acquiring Holloway would have been good decision because we would have got the support in packaging. But now since the gaming has entirely moved online, a major sector, a major market of the gaming has moved online. So they are saying that it is little need. Plendel has experienced increased competition in the recent years. This competition has led to significant increase in the research and development expenditure. Now, significant research and development expenditure. Research is expensed. It's an operating expense. So it will increase your operating expense and the operating profit margin will go down. Just see, is your operating profit margin going down? Is your operating profit margin going down? G, yes. G, ha, not G, yes. G, ha. Yes. There has also been increase in the general reduction in the expected life of the games. Expected life of the games are also reducing, with the consumers using games for shorter periods before buying new games. Since the trend is changing, the trend is changing. Understand? The consumers wants new game every day. So the life of one game is small, means the gaming being an intangible asset. Okay, let's suppose I develop the one formula for one game. Okay, how long earlier, if you see, if you go 20 years back, I developed a game. That game will run for 10 years. So the patent for the game has to be amortized over 10 years. Okay, but now I have developed a patent game. Okay, now I know that I will get the benefit only over 3 years, right? So I will have to amortize it only over 3 years. So amortization expense will increase because the cost will be the same, but life is less. So amortization expense will increase. The operating expense will increase. Operating margin will go down. Plendel and Holloway use similar amounts of plant and equipment, and all of it is leased. Plendel's property, plant and equipment is leased under 3-year lease expiring in 2009. Holloway uses much longer leases, which has an average of 10 years remaining. Okay. Now, higher lease life means higher finance cost, higher depreciation costs. Okay. Now, extracts from the Holloway's financial statements are given as follows. Now, can you find out, just for your purpose, can you find out before we start to do any analysis, find out, see if the individual FS is given, find out the ratios of individual FS also. Find out the ratios of individually, what is the ratios of Holloway. So now, why? So we can say individually Holloway was making this much margin. So what was the contribution of Holloway in the console? Was it contributing to increase the margin or was it contributing to decrease the margin? Why I'm saying it like this? Please understand my rationale. Please understand my rationale. Let's suppose parent is making a margin of 20%. Subsidiary is making a margin of 10%. So the group makes a margin of 15%. Rough, I'm saying. So subsidiary contributes to decreasing the margin of the group, right? But now let's suppose subsidiary makes a margin of 30%. then the group makes a margin of 25%. Subsidiary contributes to the increasing the margin of the group. So that's why I'm saying calculate the individual margin of subsidiary. Calculate the individual margin of subsidiary. Let's evaluate what was subsidiary contributing to, increasing the margin or decreasing the margin. Accordingly, we will be able to take a better decision. What was Holloway increasing the profitability or was Holloway decreasing the profitability? Chalo, now let us come to the ratios and comment. The gross profit margin has decreased. First of all, revenue. Revenue has increased. Revenue has increased during current year. Despite increasing competition. Okay, despite increasing competition. Okay, now this might be due to continuous research and development done by Plundle. Fairly, right? We have seen the company done research. Significant increase in research and development. Okay, might be due to that they have come up with a new game which have sort of taken over the market. Right, though there is no significant increase in the revenue, but still there is an increase. They are surviving the competition. They are not only surviving the competition, they are beating the competition. Good. Now, further we can write Holloway generated how much sales? 33,500. Generated sales of 33.5 million, which is around how much? 33.5 divided by 86.4. 39%, around 39% of group sales, which is significant. Hence, the revenue of the group will see a significant dip in future years due to disposal of Holloway. Tell me yes or no. Right? Come on, guys. Now, whenever you feel that I am writing something really out of the box that you can't even think of, do let me know. And I believe these things are very general, right? You can definitely write these points, very generic points. And as you can see, I am writing these in pointers. Which exactly you can write in the exam also. Okay, so revenue is done. Now, we can go to the gross profit margin. Gross profit margin decreases in current year. Why? It might decrease in current year. It might be due to increase in or decrease in selling prices. Might be due to decrease in selling prices to sustain competition. right? It might be due to decrease in selling prices to sustain competition, and they have sustained it, right? They have increased the revenue a lot. They have increased the revenue a lot, right? See here, please see. Please see. The cost is increasing. Revenue is increasing, but the profit is same. Meaning thereby they were able to sell more products. They were able to sell more products by reducing the price. Okay. Now further. Further, if we exclude Holloway, the gross profit margin further decreases. Why? It is because the margin of Holloway individually was how much? Just see. Can you please see? 18080 divided by 33,500. It is 54%. 53.9 was 53.9%. Okay. And hence disposal of Holloway contributes to decreasing margin. Tell me yes or no, right? These are the fair points which you can definitely write in the exam. Nothing difficult. I think fairly possible. Okay, now done. What else can you write? GP margin done. Come to operating profit margin. Operating profit margin has also decreased in the current year. So let's write that. Operating profit margin has decreased during the current year. One of the reason apparently can be decreasing gross profit margin. Another reason for decrease in operating profit margin is increasing operating costs for one you have to write this one. Research and development expenses. Second, since the trend changes fastly, the life of a game reduces, and hence the amortization increases. Okay, and hence the amortization increases, which will increase the you can say this one, what we say as operational costs. Tell me yes or no. Come on guys, is that clear everyone? Okay, now very good. What else? We have fairly written about operating profit margin. Now if we exclude subsidiary, 9.9%. oh my god. So again I'll just write this way. I'll just take the same reason again and I'll write that here. Further, if we exclude Holloway, the operating profit margin decreases, it is because the margin of Holloway individually was how much? 13580 divided by 33,500. 40.53%. My God. 40.5%. And hence disposal of Holloway contributes to decreasing margin. Okay. So this is also done. So far, how many points we have written? 1, 2, 3, 4, 5, 6, 7, 8 points written fairly. Tell me, they are very normal points. Now, interest cover is increasing, decreasing. Interest cover is decreasing. Interest cover is decreasing. Interest cover is decreasing. So let's comment on that also. Interest cover is decreasing. Now, why? Interest cover can decrease due to two reasons. One is the increase in the finance costs or decrease in the profitability. Just see, is the finance cost increasing? No, finance cost is decreasing. Finance cost is rather decreasing, right? So interest cover is decreasing. It is due to decreasing operating profits and not increasing interest costs. Okay. So how many points? 9 points fairly done. We told 9 to 10 points. We have written 9 to 10 points. Tell me, is that clear, everyone? Okay. Now we can write more points. We can write more points in decrease of operating profit margin. One more point I can write here. Goodwill impairment. Goodwill impairment. We can write goodwill impairment. Goodwill impairment of $1.5 million in current year due to loss of major customer. Due to loss of major customer, that has also contributed to decrease in the operating profit margin, right? So we have done 10 points now. See, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 points, right? Now, conclusion we can write, is the decision to dispose of Holloway good or bad? Tell me. Okay. Is the question saying about performance? Yes. Let's see here. Analyze the performance of Plundell Group for the years ending 31st December 2008 and 2007. Your answer should focus on potential disposal of Holloway, and that's what we are focusing on. What is the impact of disposal, right? And that's what we have to conclude. Tell me, you guys tell me, is the decision to dispose of Holloway good or bad? Tell me. So I'll write here. Overall, the group has performed good in current year. Nothing bad. However, due to disposal of Holloway, the margins will significantly decrease in the next year. Why? Because this is because Holloway individually was a high profit margin company which was contributing to increase the margins of Plundell. If disposed of, that's all. I think that's fine. This is fine. We have done here 2 marks. This is for 2 marks. So 10 plus 2, 12 marks. Tell me, is that something very difficult? I don't think so, yaar. We have written fairly good points. We have written fairly good points, good number of answer, good amount, good answer, and a fair answer we have written. Tell me, guys, is that clear to all of you? Come on, guys, tell me, is that clear to all of you? Is that clear to all of you? Okay. Now, with this, we come to an end of our past paper series of ACCA financial reporting paper. Okay. And I believe you guys enjoyed it. You guys learned a lot from these sessions. If these sessions were helpful, do leave a comment in the chat box. Okay. Now, interest cover is in the performance. Interest cover is part of performance. Interest cover, interest is a part of performance means what? P&L item. Interest is a part of P&L item, right? If I would have talked about gearing, yes, that's not performance. That's not performance. Okay. Chalo, that's all for the day. This is CA Vishal Jain signing off from this past paper series. I hope you enjoyed. You learned a lot, and I'm glad that I could contribute to your journey of success. Okay, but do leave a genuine feedback in the genuine feedback in the comment section of this video. Thank you guys. Bye. And also do not forget to refer these videos to all the ACCA community students. Okay. This is what I request from all of you, right? Try to share this video with all the ACCA students. This video should reach all the ACCA students appearing FR in June 2026. Will you do that for me? Tell me, guys. Come on. Will you do that for me? Let's. Why are you taking the benefit only yourself? Let all of the students take the benefit of these past paper series. Okay. So spread it as much as you can. That's all for today. Thank you, guys. Bye bye. So if you've reached till here, I assume that you have watched the entire video and I really appreciate your efforts. Okay. Now guys, what you have to do, 3 steps now. 3 steps. Step number 1. For all the 5 questions that we discussed right now, okay, that is Ray Company, Aqua Company, Longanet, Clocking and Plendel. For all these 5 questions, do self-practice. Write on your own now. Write on your own and just see how well you are able to write your answers. Okay, now step 2, I am highlighting some additional questions for self practice. Okay, few additional questions. How many questions? 1, 2, 3, 4, 5, 6, 7. I am giving you 7 additional questions from the chapter of interpretation, which you need to do the self practice. And if you do this much, I will tell you guys, your interpretation is in your control now. You will be scoring 15 plus out of 20 in the chapter of interpretation. Okay, and as part of step 3, I request all of you that if this video helped you in any manner, do go and give a comment as a feedback, give a genuine feedback, whether this video helped you or not. Okay, a genuine feedback, and also recommend this video with your friends and your any students who is appearing ACCA financial reporting in the upcoming attempts. Okay, that's all for today, guys. Thank you. Bye bye.